All right, good evening, everyone. If you can hear me, please let me know in the chat. Can you hear me clearly? Yes, guys. Awesome. Okay, so once again, good evening to everyone and morning to those of you who are on the other side of the world. My name is YY, and tonight I will be sharing with you more strategies, okay, on how to trade options. Okay, so tonight will be the last webinar for options in the Retail Rebellion series. Okay, so how many of you here, you have attended all the webinars that Adam, Bang, and Elson has presented to you? Anybody attended all the webinars? Nice. Okay, or some of you attended Harvard. Okay, good. So what's going to happen is I will be sharing with you option strategies that help me after learning from the three mentors. Okay, so Adam taught me something, Elson taught me something, Bang taught me something, and I took everything and found my own strategy to be successful. Okay, so yes, some of you have attended in the past, but you have not really received some information. Derek, thank you so much. Yes, I have slimmed down a lot and look very young down, correct? Because the market is really good these days. So no need to work every day, just go exercise. Okay, so yep, today I will teach you actually not just something, but something powerful. Okay, something powerful that can help you to exponentially grow your wealth. Okay, now how many of you here, you have a very small account or probably mid-sized account, okay, and you are not sure how to grow it? How many of you are in this situation? Small to mid-sized account, but don't know how to grow it. Less than 100K, David. Okay, anybody else? Now, tell me how much roughly you guys are, the account size that you are playing with or you're growing with. 2,000, 3,000, 30K, 40K, 200K, okay? Yes, I think most of you have what I call a small to medium-sized account, okay? Small to medium-sized account, anything less than probably 200K would be considered a medium-sized account, okay? So I don't have a multi-million account like the three mentors, okay? So I've made my fair share of mistakes in the past, and I've rebuilt my account from a small little 20 to 25K account to now it's about, how much is it? Let me see. I also forgot. Now it's about 236,000. Okay, as of today. 236,000. So how many of you wants to learn how to build your account from a small account to a relatively mid-size, or even a mid-size account to grow into a large account? How many of you wants to learn how to do that? Okay, good. So make sure you pay attention in these few hours because I'll be sharing you so many things, right? Okay, how many of you, honestly, you believe that you have the potential to do well financially in the trading market? However, you may not have the skills now. How many of you feel that way? You have the potential, but you don't have the skills. Yeah. So importantly is we have to pick up the skills. Because I remember when I first started, I always hang around with Adam. I had the opportunity to be mentored by him. And there are times he will just tell me, hey, Wai, you look at the chart. I think it will bounce. So I look at the chart. I don't see any support level, anything. Okay? And I asked him, why do you think it will bounce? There's no level of support. And Adam just tell me, feeling. I look at him. What kind of feeling is that? How is it possible you trade by feeling? Okay? It's very against what he always teaches, which is rules. Okay? But he tell me feeling. So at that moment, I didn't understand what he meant by feeling. But over time, as I start speaking to him, start learning from him, start looking at his trades, start looking at Bang's trades, Elson's trade, then I realized something. It's not feeling. It's not feeling at all. They have a set of rules that they're so familiar with, and subconsciously they're applying it. Okay? And one of the things that I learned over time is they had put in a lot of screen time. When most people are playing games out there, when most people are out there drinking, they are drawing lines on the chart. They are trading. And they started from practice. Okay? After a few years, I've learned that feeling. And that feeling is a lot to do with practice. Okay? How many of you want to learn that feeling tonight? Anybody wants to learn that feeling tonight? I share you that feeling. Tonight I got some feeling. Some holy message is sending to me. Yeah. In fact, this morning was interesting. This morning, I woke up and I saw some of the chats in the Discord channels. Some of them were really very positive about tonight's session. Yeah, especially many of them came for my session in the last event, and they applied everything that I've taught them, and many of them are doing very, very well. Okay? Yes, we need that start, the kickstart, the fire to start off our journey. Okay? Yes. Yao Xian, thank you so much. Panedu, yes. Some of you just can't wait for me to start. Some of you are telling me, why? Don't talk so much. Teach me the skill. How many of you wants me to start now to teach you the skills? Yeah, don't even talk so much, right? Just give you the skills better, right? Okay, so let me share my screen, and if you can see my screen, let's get started. Not this, not this, not this. This. Yes, come. Can you see my screen? If you can, let me get started. Let me know, yes or no. Can you see my screen? Very good. Okay, so yes, tonight my topic will be this, the no cap option hack. No cap means this, there's no limit to how much you can profit from the market. Okay, and we want to punch above our weight category or the weight level. I may be a small to mid-sized account, but it does not mean I cannot beat the market. Okay, in fact, right, if you talk about being a retail rebellion, a rebel, what we want to do is we want to make sure that we can get better results than the market out there. Like, how many of you here, you ever had financial advisors? Sorry, disclaimer. I'm not a financial advisor. I have no financial background. Okay, in fact, I'm an art student. I study history, no financial. Okay, anybody, you're like me, no financial background, okay, and you want to make money from the financial industry, no financial background. Don't worry, if I can do it, so can you. Okay, yes. So when I was younger, I graduated from university. One of the first things I received was this, a call from a friend that I have not met for the last 10 years. Suddenly call me and say, all right, let's go and have a drink. I was thinking, you did not call me for the last 10 years and now you ask me to go for a drink? Something is wrong. And true enough, this guy is a financial advisor. Okay, so remember I told you I have no financial background. So I was convinced by him, insurance. Now, some of you in Singapore will know what I'm talking about. Okay, but yeah, they are financial advisors. They advise me on how to maximize the ability and potential of my money. Basically, they are telling me, pass them my money, they invest for me, and I get back an interest of maybe 3 to 4%. Okay, it's not MLM marketing. They are really employed under major financial institutions. Okay, so they do some insurance, they do financial advisory and stuff. They have all the license, so I trust them. Okay, fast forward 10 years later, I look at my account again. My advisor is gone, switch from company to company, don't know where he is now. And I look at my account is at negative after 10 years. Okay, so it's, how many of you got this kind of experience where you put your money with another person to invest and trade? Okay, legal ones, legit ones. However, after 10 years, still not making money. Yeah, so that was when I told myself this, instead of putting my money with them, why not I do it myself? Why not I take control of my own funds and my own financial freedom? Okay, and that was when I started to learn from Adam. Okay, so it's a very simple concept. If you do not know how to do it, get someone to do it for you. Get the institution to do it for you. They charge you a fee, not a small fee, quite a big fee. Okay, or you learn how to do it on your own. Then you don't have to pay too much of fees to the institutions, but you can pay to the brokers for the service they provide. Okay, so it's a choice. Do you want to let other people handle your financial freedom, or you want to take control of your financial freedom? Okay, yep. So before I start, here's some disclaimer, like Bang, like Adam, like Elson. Okay, please read this disclaimer because it's very important. Okay, take 1 minute, read through it. If you agree, you can stay in this room. If you don't agree, let us know. We kick you out of the room. Okay. No, okay, but mainly, please read the disclaimer. Whatever I'm sharing today, it's more of a strategy, a skill. If I do any demonstration, it's a demonstration. Okay, I will not be providing any financial advice to anyone in the webinar. Okay, yes, don't claim your loss from me, even though none of my students ever did that. Okay, but yes, please read the disclaimer. Take 1-2 minutes, read through it now. Yeah, and once you're done, please let me know you're done. Sean put the money with the wife. You put your money with the wife. Sorry, it's not just no profit. You will see it ever again. You will see it. It's like me telling my daughter, I help you keep your Chinese New Year money, okay, all the ang bao. I help you keep. Okay, next time when you grow older, Papa will give you back the money. Anybody ever got that from your parents and and you have never seen that money before? Gone, totally gone. Yeah. Okay, and yeah, there's a lot of cases. So if you realize I don't like to stick to the plan. I rather whatever we are sharing here, okay, based on the interaction, let's share some information. You're okay with this stuff? Yeah, I don't really like to just follow the slides. We have a discussion and see whatever I can do to guide you. Porati is the wife. Yeah, Porati is okay. Prove the guys wrong. Prove the guys wrong. Give your husband back 200%. Okay, so you're done? Yes. Hey, let's not get into male versus female discussion here. Come, let's all world peace, make money. Okay, we come here to make money. Okay, so let's get started. So here's the agenda for tonight. Number one, we want to learn 2 strategies. I'm going to help you with 2 strategies. Okay, and these 2 strategies are suitable for small accounts to mid-sized account holders. Okay, now of course, if you are a large account holder, this strategy even more it applies to you. In fact, right, this game is a fair game. With the right skills, if you have a large account holder, it's easier to make money. Simple as that. I don't need anything too complicated. I can make money. Okay, just like how Bang, Adam, Elson, they can do it. Okay, now, but if you're a small account holder, you need even more help, even more skill, even more mentoring. Would you all agree with me on that? Large account, they can whack and still get the profits easily. Okay, whereas small account holder, right, what we want to do is we want to choose our better. We want to choose our better so that our better, it's beneficial to us. Okay, I don't have $1 million, but I can choose trades that cost me $50 to $200 or $300. I don't have to trade $10,000, $20,000. Make sense? So yes, small account return, they tend to compound slower. That is true. Okay. At the same time, tonight I'm going to show you 2 strategies. These 2 strategies are the ones that got my account compound very fast. Okay. I will show you the one that helped me grow exponentially first. After that, I will show you the one that helped me grow from a small account to a mid-sized account. You're okay with this? Okay, we start with the one that grew exponentially first. Okay, then for those of you with slightly smaller account, we will go to the second strategy that helped me to grow from just a $20 over $1,000 account to maybe almost 100,000. Okay, so how many years did I take to compound? About 7 years. About 7 years. Okay, but my first 2 years was a mess. Literally, I learned everything, and I thought I was good. So I decided to break all the rules. Okay, I broke all the rules and busted my account. So my first 2 years was quite bad, but after I decided to do things properly, learn from the real mentors, okay, go into our community, that was when my account started to grow very fast. Okay, so it's not just about knowing how to do it, but also you must have a group of people that will remind you, a group of people that will help you to check your mistakes, and a group of people that is willing to tell you that you are doing the wrong things. Stop it. Would you all agree that this is very important? You wouldn't want people to be there and say, oh, you're doing the wrong thing, but it's okay, just go on, keep on doing it. We want people that will tell us, hey, you are doing the wrong thing, stop it. As a friend, I tell you, this is wrong. You need to stop. Okay, and that's what I have. I have mentors that will tell me if I do the wrong things. Adam will scold me. If I break my trading rules and started doing something crazy these days, Adam will scold me. And that is what I appreciate. Honest, true friends and mentors who will guide me, who will tell me what's wrong. Yeah. So yes, they are my partners in crime. I rather have people like that around me than people who will just tell me all the nice things. Agree? Yeah. So when it comes to trading and investment, right, we have to be very, very honest with ourselves. What's our financial situation? What are we capable of at this moment? What's our risk appetite? How can we grow? True? Yeah. Will Adam be always right? Not necessary. There will be days he is wrong and he is willing to admit that he was wrong. Okay. So there are days he's right, and I appreciate that he shares with me how to do it. So trading is never about being absolutely right. Even if you are right, sometimes you can still lose. Okay. So please don't think about whether is it right or wrong, but more of is it valid or invalid. Okay. Yes, a lot of people, you are like me. Itchy backside, know a bit, then after that, started to go crazy, started to go greedy. Okay, then that's where you bust the account. Okay, I know it because I've done it 3 times. Okay, I've done it 3 times, and I remember the 3rd time I did it, right? I was so scared of telling Adam because I know he was just scold me. And when I told him, right, Adam just smiled at me and said this, good. Some people, they bust their account, they don't learn their lesson. Some bust the 2nd time, they don't learn their lesson. Some bust the 3rd time, they don't learn their lesson. Eventually, they will not continue trading anymore. Some learn their lesson and they become better traders. Okay, so he just smiled at me and told me this. He said, congratulations, you're on your 3rd busted account. You need to decide where you want to go. Okay, so since then, my account has been growing because I started to do things carefully. Yes, it's discipline. Okay, so these strategies, what will you learn today? You will learn how to construct the trade. You will learn what are the optimal rules and exit rules. Knowing how to trade does not mean it's a good trade. Knowing how to enter does not mean it's a good trade. You have to enter at positions where it is optimal, where you have a high probability. Would you all agree with me on that? Okay? Trading is easy. Just click a few buttons and you think you can make money. But when you go in for high probability trades, you have a higher chance. Make sense? Okay? So it's not just about timing, okay? It's about knowing when not to enter. Just because other people say it's a good level of support does not mean you have to enter. In fact, among the mentors and I, there are so many trades we disagree on whether to enter or not enter. Okay, and we take different trades. End of the day, all of us make money. Okay, what's more important is we have to enter at positions where it is optimal. Make sense? Okay, and what are the exit rules? This is something, if you can bring back from tonight's session, is this. It's not about how much money you make or how fast you make. It's about, can you control your losses so that your losses are small and your wins are big. Every loss should be kept to a small amount, whereas every win, we want it to grow and compound. And that's how you make money. Okay, so whenever I trade, you might want to take some notes on this. Whenever I trade, I always ask myself this question: how much can I lose? Not how much can I win or how much can I make. It's how much can I lose? And if I lose this amount, can I still sleep well? If my answer is no, I will not take the trade. I'll cut my loss. But if my answer is yes, I lose this amount, I can still sleep well, life goes on, then I think that's a reasonable amount I can afford to lose. Okay, so entry rules, exit rules. Next, what are the benefits of these 2 strategies and what are the things to look out for? Okay, these 2 strategies that I'm sharing with you, many people who trade them, they don't make money. Okay, there are a lot of people, they don't make money trading these 2 strategies that I'm sharing with you. Okay, so I will share with you how you can be profitable trading these 2 strategies. Okay, like those of you in the audience now, how many of you here, before you joined my session in the last few events, right? How many of you were trading bull call spread okay, and you didn't make money. After that, you make money. Agree? Yeah. So it's very, very important. Yes, and the bullish synthetic, it's about watching out for the most optimal kind of trades and what are the telltale signs that we should not be entering. Okay. And of course, important case studies. Okay. Case studies of my actual trades based on two strategies, bullish synthetic call spread, okay, or we call it BSS, and the book call spread, we call it BCS. Okay. So I will go through the case studies, I'll go through all the information, and after that, we will do a live Q&A. Okay, yeah, the bullish synthetic call spread, normally we just call it BSS. Okay, so BSCS too long. Okay, just call BSS, or some of them call it BS. So I'm going to teach you how to BS tonight. Yes, it's the same as BSS. Okay, will I be demonstrating trades in IB tonight? We see how it goes. If there's nice trades, maybe I can demo to you how to use it. Okay, yeah. So guys, everybody clear what we are going to do tonight? Yes, no, let me know. Clear? Okay, very good. Okay, so for those of you who do not know me, here's a bit of myself. I am a trading and investment coach. I personally coach students for options. Okay, so in the audience, you will see some of my students in the group. They are very supportive. One of my students just came back from holiday and just messaged me, all right, I'm going to attend your session tonight. Yeah, support you. Yes. So yes, I do coaching, okay, but that is not part of today's program. Okay, but that's what I do. I do coach students on a one-on-one basis. Then I also do research for Adam, helping him to find the best quality companies to invest. In fact, many of my trading strategies are based on what I've researched for Adam. Okay, so whatever I research for him, and I think that, hey, these are good companies that I can start to do some trading. Those are the ones that I will usually trade. Okay, so I co-train with Adam for the Wealth Academy Masterclass. Okay, and one thing that I'm very, very proud of myself is this. I tripled two of my accounts. Okay, one with Tasty Trade in 3 years and one with Weebu in 1 year. Okay, that 1 year was last June to today. Okay, are they all option strategies applied? The one with Tasty Trade was a pure bull call spread strategy. Okay, that account totally no other option strategies, just bull call spread. That was the one that I built the account and grow my small account relatively fast. Okay, then my second account was a very simple strategy. Good companies usually will get hit by negative news once in a while. You all agree with me on that? Even the greatest companies will get hit by negative news once in a while. Today is a very good example. Google just announced earnings, great earnings. I remember a few months ago, everybody was saying this, Google is losing the moat. Google is facing all the lawsuit. Google is going to be kicked out. Okay, you're going to be broken up. Yes, and some of you, United Health. So there's a lot of this kind of rubbish out there. So I like to trade this kind of rubbish because whenever companies get hit by this kind of short-term, untrue negative news, that's the best for me to trade. Okay, so yes, my two small accounts grew quite fast. Okay, yes, let's go. Next, so why do I like being an options trader? Now, to be fair, I trade stocks, I trade options, I trade PAM, I trade Forex, I trade everything. Okay, so now I am the combined version of all the mentors. I trade everything. Okay, so what happens is this. To me, options is good for me because options are like building blocks. It's a Swiss Army knife. You can craft it in the way that's suitable for your account size, for your risk profile. Very flexible. Okay, in fact, right, I love to trade strategies that most people don't trade. Okay, like I mentioned to you, the strategies I'm sharing with you tonight are strategies that most people, if they trade it, they will lose. Okay, but I found the sweet spot. Okay, the sweet spot to trading these strategies. Yes, they are like building logos. You build it, then after that, you can rebuild into something else. Okay, and that's what I love. Okay, and with the right strategy, the max loss can be protected even when the market gaps. in the opposite direction. Okay, if I trade stocks outright, the stock price gaps down. Maybe the CEO got found in a scandal, got captured by camera kissing the employee. If the CEO does that, stock price drop, right? So, and if it gaps down, trading stocks itself, you are not protected, even if you have a predetermined stop loss. But if you know how to use options, you are protected. Okay, you are protected. And that also means those in Asia, we can sleep in peace. We don't care what happened in the US. We don't care what happened in the country that we are trading. We don't care because we are protected. Okay, so that's why I say when it comes to options, if you know how to choose your strategies, you can still be profitable and still get protection. Okay, yes, never attend the concert with your loved ones. Okay, and very importantly is number 3, you require lesser capital to trade. Okay, lesser capital. If I buy a stock outright, I need to pay the full amount. If I trade using options, I probably just need to pay a small percentage, 20%, 30% of the full amount. Okay, so that is one very, very big advantage of being an options trader. By having your cash or your buying power blocked and it's lesser, you get to trade more and you get to do more. Okay, so yes, Mitch, what's the difference between the products that I'm teaching today and the ones Bang is teaching in the course? Okay, to put it simple, whatever I'm teaching today is what Bang is teaching. Okay, but I use his strategies to optimize for a small to mid account size traders. Okay, and yes, it is very useful for small to mid account size traders. Okay, for large account size traders, definitely these will help you grow your account fast. Okay, now what's the main difference between the way I trade and the way Bang trades and Adam trades? The main difference is this: I am a debit trader. Adam is a credit trader. Bang is a credit trader. Okay, now how many of you remember that Bang and Adam, they shared that the way to make money in options is to be a seller, to be a credit trader? How many of you remembers that? They all remember that Adam and Bang, yes, they say that they are credit traders, they are sellers, and that's the only way to make money. Agree? They lied to you because I am a debit trader. Me, I buy options. Who say buying cannot make money? Can, if you know how to do it. Okay, so what's the difference? A credit trader is like an insurance agent. Okay, it's an insurance company. You collect the premium. You collect the premium, okay, and out of maybe 1,000 people that you collect the premium, only one gets injured. End of the day, you keep the premium. That's a very good deal to be an insurance company, correct? Now, as a debit trader, I do it differently. I pay the premium first. Okay, of course, I don't hope that I get injured. Okay, but I pay the premium first, just in case I do get injured, I get the payout. So that's the very, very big difference. Okay, and later I will show you in terms of statistics why is it being a debit trader has its advantages too. Okay, so as a credit trader, I collect premium. As a debit trader, I pay premium. Okay, so in a while, as I go through the skills and strategies, you will start to understand that if you know how to trade, you know how to use the debit strategies, it can be equally profitable. All right? Yes, there is a place for debit traders, but this place is a very small place. It's only for the limited few people who dares to test it out, who dares to join this community. Okay, now why I say so? Because when I was exposed to options by Bang and Adam was a debit trader. Okay, Adam was a debit trader. In fact, he was the one who got me into options, and he said this: all right, can you look at all our course videos in options? Okay, and after that, let's trade together. So Bang and Adam recorded the videos, and every day Adam will send me stocks or companies that is useful or has a chance of being profitable for bull call spread. Okay, every day he will send me, and we will talk about it. We will trade it. Okay, so Adam used to be a debit trader, and he eventually decided to abandon me because he went to talk to Bang and he got convinced that selling premium, selling options is the way to go. Okay, and he abandoned me. He joined the dark side. He joined the evil clan to sell credits, collect premium. Okay, where I got stuck in the debit trading. Okay, and he was telling me, all right, join us and sell credit. Join the dark side. Okay, and I look at this whole situation. I ask myself this question. If I join the dark side, can I be profitable? I can. But do I have a larger account to be profitable until it's significant? Not easy. Okay, the amount I collect may be small amount. Okay, later I will show you exactly numbers how it works. Okay, but my losses could be heavy. Whereas if I'm a debit trader, I pay small amount, my losses are big. But the big difference is, as a credit trader, their win rate is super high. It can go up to 80-90% win rate. So net, they are still profitable. My debit strategy, most people trade it, the win rate probably 20-30%. But when you win big. Okay, still profitable. That's why I say option is very flexible. It doesn't matter whether you are a debit trader or credit traders. As long as you are being mentored carefully, you know what you're doing, you practice, you get feedback, eventually can still be profitable. Okay, so yes, Bang uses debit trades for DS Hammer and Calendar, right? But his objective is to collect premium. End of the day, his aim is to collect premium. My aim is not to collect premium. My aim is to go for a bet and make sure I win big. That's how I do it. I don't need very high win rate, but I need to make sure that when I win more. You all agree? So everybody here understand the difference between Adam and Bang's style and my style? Okay. I know I don't bet on reversal patterns. Okay, but I bet on when I win big. With a small amount, I win big. Okay. Whereas Adam and Bang is they win small, okay, and they collect a lot. They collect a lot of premium. Okay. Now, why did I choose this route is because it is, to me, safer. Because the losses can be controlled quite well. Remember, I told you from the start, I always focus on the losses. If I can control my loss, my wins will be more than my loss. That's what I want to do. Okay. Do I lose big? No. In fact, when I lose very small. Okay, and later I will show you the exact trade, the exact numbers, how much I win, how much I lose. Would you all want to see this information? Okay, so I'm not going to say, oh, this is a strategy, this is how it works. I will show you the numbers, I will show you the exact trade I take, how much I make, how much I lose. How many of you wants to see this data? Yep, correct. Now you will understand as we go along. Okay, but what's more important is let's have the understanding that tonight we are focused on using small amount to win big. Okay, small amount to win big and still make sure that we are protected in a certain way. Okay, yes, can I trade certain stock or all kinds of stocks? Normally, I just trade a certain group of stocks. Okay, not all stocks are suitable for this. Yeah. Okay, so some of you are asking for my results. So let me show you my results. Okay, over here, you can see this is my this year's result. Okay, this year my result is up 47% year to date. Okay, year to date. I can tell you that most of these are option trade. Okay, most of these are option trade. This year is 47%. Last 12 months is about 85%. And historically, you can see it's actually quite consistent. Okay, 7% month to date, year to date 47, 1 year 85, 3 years 234%, 5 years 166%, 10 years 275. Okay, now how many of you would love to have this kind of results? How many of you would love to have this kind of results? You want? Okay, then the next question is this. How many of you feels that with this kind of results, right, you can actually earn more compared to putting the money with a financial advisor and competitors? Would this be much better for you? Definitely. Okay, and this is why I am doing my own trading now. Because if I can get this kind of results, why would I put my money with somebody else? Straightforward. It's a straightforward case. Now, the fact that all of you are here only means that you want to grow your wealth and you want to take control of your own results. Would you agree with me on that? Okay? Putting aside what people do, how banks give you mediocre interest, how even certain kind of advisor give you certain interest, it will never beat, okay, your result if you know how to do it. You'll never beat your result even though you know how to, if you know how to handle it. Okay, so yes, that's why tonight is very, very important. Okay, I'm going to show you how to beat the market, how to make sure that you can do better than most people out there. All right, okay, and if you want to look at actual numbers, this is what I made in the last 12 months, $107,921.31 as of tonight before market open. Okay, I just got this data from IDKR. In fact, this was my best year. This is my best year in the last 7 years. Okay, it's very good results, and the biggest difference is the bullish synthetic strategy that I'm going to show you. It literally grew my account. All right. Yes, David, it's about there 9K per month. Okay, so how many of you here, if you can earn 9K a month, okay, from a 100K account, you will be very happy already. How many of you 9K? I won't say it's definitely can earn, but I'm just saying that if you can get this kind of amount, how many of you will be very happy already? Very good profit, right? Okay, that's why some of you ask me, why are you always smiling in the chat group? Well, with this kind of results, of course I smile one. Yeah, I don't care about Liberation Day. Some of you ask me Liberation Day, what happened to my account? There, this also happened. Liberation, oops, sorry. This also happened. 2024, 2025, the Liberation Day is around here. It dropped. It did drop a bit. Okay. Or you look at the last 12 months, okay, this also happened. It was a drop. No doubt about that. Okay. However, I know what I'm doing. I'm confident of my results. I'm confident of my strategies. I know it works. And I wrote past it. I don't really care what Donald Trump says. I don't care what tariff out there. To me, most important is I make money from the market. Would you agree with me on that? I don't care what the whole world says about tariff, as long as I make money. How many of you have this kind of same mentality as me? I don't care. Okay, they can say all they want. Okay, in fact, if the market goes down, it's even better. Okay, yep, get that? Okay, now so here's the bullish synthetic strategy or bullish synthetic spread. The bullish synthetic spread is a two-legged option strategy designed to simulate, okay, investing or trading one contract worth of shares. Now, one contract in options in the US is about 100 shares. It's 100 shares, okay, not about. But in Hong Kong, in China, it could be 500 or 800 shares, or even 100 shares, 200 shares, any numbers. Okay, so for simplicity, tonight I will only focus on 100 shares. Okay, and there's two legs to it. Number one is you buy a long call. That means you buy. Now, when you buy a long call, are you paying premium or collecting premium? When you buy a long call, are you paying premium or collecting premium? You pay. You pay money. Okay? You pay money, huh? Now, when you sell, after that, what we do is we sell a short put. We sell. Okay? Now, question. When you sell a short put, are you paying premium or collecting premium? Collect. Okay? So, on one hand, I pay. On the other hand, I collect. Now, what do you think is the objective of selling the short put? Is it to collect premium? No, the short put, right, is to offset the cost of the long call. So if the long call cost me $3 and the short put I collect $1, net $2. So I pay lesser. Everybody clear? So the short put is to get a short put is to reduce the premium you pay. Okay. Collateral, yes, you need your cash and so on. Okay, but that will be a different topic already. Okay, so for now, everybody clear about why we have to sell the short put. We buy the long call, the win rate is not high. Okay, as Adam has shared with you, Bang has shared with you. You just go a straight long call, win rate is very low. But if I do a short put, I can minimize or reduce the cost. Okay, is it a short naked put? No, it's not. Okay, it's not a short naked put, but it's something similar. Okay, something similar. So don't jump into conclusion what it works, how it works, right? Because when you go online, right, you go and search this strategy, you will be very scared. You will be scared by it because on the surface, it looks very, very dangerous. Okay, so I have to make a disclaimer. This strategy, if you just go online and you search it, you will think that this is a very dangerous strategy. Okay, but if you know how to trade this, you will know what are the risks involved, and if you think this is suitable for you, then you can trade it. Everybody clear about here? Okay, so the main thing is this: we do both trades at the same strike and the same expiration. Same strike, same expiration. Okay, yes, you can do split strike. Later, I'll show you the split strike. Okay, but for now, everybody clear how this trade is set up first. Buy a long call, sell a short put, same strike, same expiration. If this is clear for you, please let me know in the chat. Yeah, okay, good. So, question, why do we deploy the bullish synthetic spread? Okay, why are we deploying these? We deploy it because, number one, it is cheaper than buying the stocks outright. I just need to pay about 30% of the requirement in cash, and I can own 100 shares. Okay, I do 30%, I can own 100 shares. So you don't need that much cash. Or should I say, you still need the cash, but you don't need to pay the broker as collateral. You can use the cash to do something else, okay? Which is what I did. I used the cash that I saved to go and earn interest, to go and trade other strategies. Okay, so one of the things that I love the BSS is because it's cheaper than buying stocks. Okay, I don't have to deploy the full cash. 30%, sometimes 40% is better than giving up 100%. Okay, yes, you free up the buying power. Number two, any excess cash that you have, certain brokers, they pay you for the interest. They pay you interest. Okay, because instead of putting up 100% cash, now you're only putting up 30%, which means the other 70% is not used. So if it's not used, some brokers will just leave it alone in your account. Some brokers will pay you provided you fulfill certain conditions. Now, how many of you here, you would prefer the broker to pay you interest rather than you pay the broker interest? Assuming that you are still using margin, you are still using loan, all these things, but you prefer the brokers to pay you. Okay? Yes. So I use this broker called IBKR. In the past, I didn't understand how this works. So I bought the shares. Okay, I went a bit more aggressive buying with a bit of margin, not a lot, just a bit of margin. And during COVID, the market kept coming down, and I was holding on to the shares using full cash. Ended up, the broker charged me tons of interest because the interest rate is so high. Okay? Yes, I used IBKR at that time. So the interest rate was very high. I paid tons of interest. Okay? And after the year, instead of being profitable, it was a loss largely due to the interest. Okay? So how many of you will say that it's a waste of time for the year? You put in so much effort, and you get a lot. You lose because of interest. Yeah. So let me show you what I mean. When you use margin, by the way, options itself is margin. Okay, options is using margin. When you use margin to purchase stocks, they charge you interest on the margin, the loan. So in 2023, I was paying an interest of $2,178. Okay, but in 2024, I remember that time I told Adam, I told Bang, I think there's a loophole here. If they are charging me interest because I took a loan from them, what if I can craft the options trade by converting my shares, the actual shares that I have, converting them into options, and I keep the cash. Okay, so what happened was the next year I converted all my shares that I have. There is at least 100 shares. Some of my shares, I have 100 shares, sold them off, decided to deploy the bullish synthetic. Okay, so I sold off my shares and deployed bullish synthetic. Right? Ended up next year, I got interest. Not bad. $300 over, not that little, but at least I'm not paying interest anymore. You see that? Okay. 2024, I got 549 till now. Okay, 2024 till year to date. No, this is not even year to date. This is until December. Okay, this is December. So you can see that the same amount of position that you have, instead of holding out shares, if you convert to bullish synthetic, you actually save on the interest. See that? So the interest they are paying you on the excess cash. Okay? Of course, you must have a certain amount, minimum amount before they pay you. Okay, but my point is this: with the same amount that I'm holding, same number of shares I'm holding, would I rather pay interest or would I rather receive interest? It's a no-brainer. I'd rather receive interest. You get it? Especially when the interest rate is so high these few days. Yeah. Okay. So how much capital? Honestly, I didn't calculate how much capital to get this. Okay, but what I did was I sold off all my 100 shares for every stock, converted them to bullish synthetic, and I got interest. Okay, good question. Boon Boon is asking, why not deploy the leftover 60% cash? Well, you can deploy, nothing wrong with that. Okay, sometimes there is no good trade, I don't take. I don't force a trade. If the stocks keep going up, it's not pulling back, then I don't trade. Okay, so I'm patient enough to wait. Just collect interest while we wait. And true enough, in February, March, the market came down. I deployed my 60% cash. In fact, I deployed another 30%. Yeah. So yes, you can use your cash in IBKR to trade options, but take note, you need a margin account, not a cash account. Okay, yes, later I will show you how to convert your BSS. Okay, so I'll show you how to do that. All right, can I? So next, when we use the BSS, we have more buying power to trade other option strategies. You see, the Wave Rider mentorship program is not just 1-2 strategies. It has a total of 26 different strategies. Okay, I may deploy maybe 30%, 40% on a certain strategy. The remaining I can deploy to all other strategies. Okay, that I may not trade that much, but I still want to trade. So there are 26 strategies, more than sufficient for you to become profitable. Okay, so I can deploy to them. I can use it to trade stocks. I can use it to do cash secure put. I can do a lot of things with the remaining 60-70%. Okay, so very, very important. You want the buying power. Whether you use it or not is totally different story. But I want the buying power so that when it's time to deploy, I deploy. You don't want a case where you fully deploy your buying power already and the market drops. End up you want to deploy, but the broker tell you, sorry, you don't have enough buying power. You all agree with me on this? You want that flexibility that when the market drop, you must have enough buying power. Okay, so that's why one of the things I do for BSS is this. I make sure that my buying power is there. And whenever I want to deploy, I will deploy. All right? Okay, and the good thing about BSS is this. Even if we are wrong, we can still be right as long as we invest in the right company. Okay? Now, those of you attended Adam's session, Adam did share a small little portion that he uses the bullish synthetic spread to trade. Okay, to trade. So he has a mental cut loss point. Once it goes below a certain point, he cut loss, that's it, end of the game. Now, for me, I deploy it very differently. I use it to invest. I use it to invest. So even if it drops, I don't really care. If it drops and it's going to expire, I will close the trade, reopen. For most of my investments, close, reopen, take the loss, reopen. Okay, and it can be done. And later I'll go through the specific reason why it can be done. Okay, and good thing is this: a BSS has no upside limit. Okay, which means that if the stock goes to 1 million, you get all the profits, provided your options did not expire. Even expire, we can renew it. Okay, so what's the typical expiration? For me, it's 1 to 3 years. My typical expiration is 1 to 3 years. For Adam, it's 30 to 45 days. You can do it either way, it's fine. Doesn't really make a difference. Okay, it's just that he will cut loss, whereas I don't usually cut loss because I choose the companies that I think it will go up in the long term. That's how I deploy it. Okay, like if I have a BSS, okay, I give you the most simple. NASDAQ, triple Q, right? Do you think triple Q will be the same price as it is now, or will it be higher 10 years from now? Triple Q, Q, will it be the same as today, or will it be higher 10 years from now? Okay, most of you think it's higher, right? Don't even need to think it. Triple Q, tech stocks. Even if one of the big techs fail, the rest will still do well. The AI. That's my feeler. So I don't mind deploying triple Q, even if it drops in the next 2 years, 3 years, it's okay. Take the loss, redeploy. Eventually, it may go up. If I feel I am strongly, I understand triple Q, I understand the company, I have that conviction, I will just redeploy. See that? Okay. What happened when the stock price halves? Well, the stock price half means I'm going to lose some money in the short term. Then I will close the trade, redeploy, and when it starts to go back up, I make money. Okay, I will show you a few examples as we go along. Okay, Parati. Yes, the stock may not always go up in the short term, but it may go up in the long term. All right. How about TQQQ? Good question. Okay. Many of the stocks that you are talking about, I have them in my portfolio. I have them in the portfolio. Do I close the trade with 50% loss? Nope. Closing 50% loss is for losers. I know that, I'm joking only. Okay, no, I don't close. Okay, my style, I don't close. Okay, even if you get me 90% loss, I also don't close. Okay, but I will explain to you how it works. All right. Okay, so question: is it really so easy? Why I say it as if it's a sure win? It looks and sounds like it's a sure win. Is it really that easy? No, it is not that easy. Okay, it is just that I'm showing you why it's useful. End of the day, it's still down to the individual to deploy. Okay, so let me show you something I saw this morning from one of the group of students who were trading BSS. Okay, this was what I saw in the morning in one of the group. Delightful Kiwi said this: thanks for the tip. I entered a BSS in the morning, took my dog out for a poop, and came back to close the trade with $1,162 profit. I think I can get used to it. So I don't know. I call this lucky. Enter a trade immediately is profitable. At the same time is, if you don't enter, you don't get a chance. See that? So the good thing is, Delightful Kiwi, he learned it, or he or she, I'm not very familiar, okay, learn it from fellow students who learned it from me, okay, and they were deploying BSS quite well, okay. But Nick, one of the students who is super into BSS, okay, even more into it than me, okay, his aim is to save the world of poverty, okay. So yes, how many of you don't mind this kind of profit? Okay, I won't say the day, probably maybe just a few days, a few weeks, okay, depending on account size and trade. How many of you don't mind having this kind of results? Yes, join me. We will save the world of poverty. Yeah, yes, definitely. I have to be very fair. This strategy, if you don't do it properly, the risk is high. But if you do it properly, it's relatively okay to do it and safe. If you do it properly, okay. If you break the rules that I'm going to show it to you in a while, then it's your own risk. Okay. So how do I manage the risk and stuff? So everything I will share. Okay, now, so when to deploy? Number one, you deploy when the companies are ridiculously oversold due to negative news. Okay, great companies undervalued, but negative news ridiculously oversold. Okay, guys, please tell me in the chat which companies do you think falls under this category? Which company falls under this category? Ridiculously oversold. So obviously Apple, United Health, Tesla, Elevance, okay, Google, Intel, Alibaba. Okay, good. So you have your idea of ridiculous oversold. Okay, I look at some of these companies. I cannot comment on individual companies whether is it good or bad. I think most of them is true. I think so. Ridiculous oversold. Tesla. Depend on you. If you have conviction, then okay. But I'm not a fan. I'm not a fan. Okay. I'm a fan of EV, but I'm not a fan of specific company. I'm a fan of industry. Okay. ASML, yeah, most of them are relatively quite reasonable companies. CRCL, not enough data yet. It just got listed. So CRCL got listed. I wouldn't be touching this one. Okay. So Lululemon, nope, not for me. I'm a Nike guy. Lululemon, not for me. Okay, Oscar, very good. We shall see. Solar, Copa, CNG. Okay, so you guys have your own list of companies you think is ridiculously oversold. So that's a good start. That's a good start already. At least you have some idea which are the ones already. Next, when to deploy? You deploy when companies are significantly undervalued. Oversold doesn't mean it's a good entry point. It must be undervalued. Okay, if it's oversold but still overvalued, then I wouldn't enter these countries. Okay, I want great companies, oversold, still undervalued. To me, 20% discount would be a reasonable amount that allows me to consider. Okay, I cannot talk about specific companies, but if you look at the companies, right, you will know that certain companies are great and they are very oversold. Whereas certain companies oversold, they are still not that great. Okay, so yes, it has to be ideally below intrinsic value. Most of the time, I don't even touch a company with bullish synthetic spread unless it is discounted 20%, 30% below intrinsic value. Because remember, I told you entry point, high probability. So if it is just at fair value, the chances of it dropping is high. Make sense? But if it's 20%, 30% oversold and I enter a trade, even if it drops, there's a limit to where it's going to drop, unless something is wrong with the company. If there's nothing wrong with the company, it can drop another 10%, 30%, that's about it. Then probably will recover. Okay. But if I enter high, there's another 30, 40% to go. So I will choose companies that are significantly undervalued to enter. Okay. Next. We also deploy when we want to own the shares, but we want to release the buying power. So what I do is I sell away the shares. Sell away the shares. Immediately, I open a bullish synthetic. That's what we do. Okay. And when we want to take a small bet on a speculative position, small bet, guys, small bet. Okay. Why you hear me emphasizing this is some students, they use bullish synthetic for big bets. They will buy as if their life depends on it. No, please don't do that, because when the stock goes down, it can go down even more. Please don't take big bets with bullish synthetic. Small bets, small little ones. Okay, it's fine. No all in. This one you go all in. You be prepared to pass your account if it goes wrong. Okay, so no big bets, small bets. A few contracts depending on your account size. But please don't play too big on this. Okay. And when you are using margin to own the shares, very important, you must have the cash. Bullish synthetic, while it reduces the buying power, it is using margin. Okay, I must have the cash somewhere. Just in case it drops, I can top up my account to make sure that I don't get margin call. Okay, the money could be in my brokerage account, just lying there earning interest. It could be in my bank account. Money must be there. Okay, please don't trade bullish synthetic when you don't have the capability to handle the short-term losses. You must have the ability to handle the short-term losses. Okay, because for this strategy to work for investment, the short-term losses can be big when things don't go the way you want it. Okay, so please make sure you have your cash ready, just in case you need to handle the short-term losses. Okay, so normally I have whatever I'm deploying, right? I have the same amount of cash somewhere else. Okay, it's just that I don't use it. Okay, so it's up to you how you want to deploy it, but make sure, very important, have the cash somewhere else. Okay, if you don't have a margin account, can you use BSS? Cannot. BSS, you must have a margin account. You have to use options. Okay, DTE 1 to 3 years for me. 1 to 3 years. All right. Now, what's the risk? The downside risk is when the stock goes to zero, just like any other stock. It goes to zero, 100% loss. Okay, that's the reason. Number 2, forced liquidation can occur when one over trades. So if you over trade, okay, if you over trade and the stock price drops significantly, the broker can liquidate your position. We call it margin call. Okay, this is also why I tell you, please do not over trade. It's a very good strategy, but if you overdo it, it can be a double-edged sword. All right. Next, if the stock moves sideways until expiration, you lose some of your premium. In fact, you lose your premium. Okay. So premium is a risk. However, if you close the trade before expiration, the premium risk is very minimal. Okay. So ideally, you do not want to hold until expiration. 30 days before expiration, you can close it. Okay, or you can roll it. Okay, so please don't hold until expiration unless there's a reason you want to hold. All right. Now, here are 7 essential points for you. For new investors, new traders, for current investors, traders, please make sure you take note of this when you trade the BSS. Number 1, only invest in fundamentally strong companies. Why? Great companies, they can go down in the short term, but eventually they will recover. At least 9 out of 10 will recover. Great companies. The crap companies, they go down, they will never recover. So fundamentally strong companies is one of the criteria when I choose companies to trade BSS. Yes, when the stock goes lower, the margin will also increase. This is why you need more buffer. Okay. Number 2, only invest when you have a significant margin of discount from the intrinsic value of a company. Okay, from the intrinsic value of a company. Number 3, ideally, you should wait for a confirmation candle. So stock drops like this. Let's say let me see if I can draw it out. If the stock goes up like that, then comes down. Okay, now when it comes down, normally at this level, I probably will not enter unless I'm very confident. Okay, because it can go to the support and it can go even lower. Everybody agree with me? It can hit support, but it can also go lower. Would you agree that this is possible? Yes, right. It's definitely possible. It can hit the support, then go lower. So what I want to do is, if I want to enter a bullish synthetic, I prefer to have next candle or the next few candles bullish. Okay, I want the next few candles to be bullish. Daily time frame, monthly time frame doesn't really matter. What matters is it must be a strong company. So normally for me, I look at the daily time frame. Okay, because remember, I'm looking at long term. So long term, right? 1 day, 2 days price action doesn't really matter. Fundamentals matter more. Okay, but to make myself feel better, I prefer a confirmation candle before I enter. Okay, so how much discount? Generally about 20% discount. I will start looking at it. 30% even better. Okay, can you buy a put for protection? Yes, Frank. Yes, you can do that. That will be a different strategy. Called Bubam. Okay, Bang uses a strategy to trade also. So my bullish synthetic, right, is very similar to bull bang. The only thing is this: I don't buy a protection. I have no protection. Okay, that's why it has to be strong companies. If you do it on the lousy companies without protection, it can go to zero. You do it on the strong companies without protection, I can just roll it, wait for another 1 year, it will recover. Okay, at least the ones that I've chosen. Okay, so everybody clear about entry point for confirmation here? Is this clear enough for you? Confirmation entry point. Ideally, you want a confirmation. All clear? Yes, no, guys? Come, tell me. All clear? Okay. Good. So once you're clear, let's move on. And you have to be patient. Do not overpay for options. Why? If the current option price is, let's say, between 50 cents to $1, that's very common because it's long term. And it's long term, the spread is wide. Okay, the buyer wants to buy it at 50 cents, the seller wants to sell it at $1. The spread can be wide. 1 year options, this is common. Liquidity is low. Okay, please do not pay what the market is asking for. If it's me, 70 cents and 50 cents, which do you think I will pay? Do you think I will pay 70 cents or will I pay 50 cents? Sorry, 50 cents and $1. 50 cents and $1. Do you think I'll pay 50 cents? I will offer 50 cents or will I offer $1? Or is there any other price? 75 cents, 65 cents, $1, 50 cents, right? Answer: I won't even pay 50 cents. I probably put 20 cents. I'll just put 20 cents. Okay? And I'll put 20 cents, 25 cents, 30 cents, and I'll go and sleep. That's me. Okay? I'll go and sleep, and if the price really drops, it gets filled, bingo, I got it at a low price. And when I get it at a low price, the chance of winning is high. True? You don't want to get it at a bad price. You get it at a bad price, the moment you enter, you lose. Okay? So, no, Alicia is not anyhow price because it's a long-term contract. Remember I told you 1 year to 3 years? 1 year to 3 years contract, the liquidity is very thin. That leads to the bid and ask spread very wide. So when it's very wide, the price that is offered is not really the real price. It's not really real price because there's very little people buying. So I don't want to go in and just take whatever price is on offer. I want to bargain. Okay? So even if tonight it does not get filled, it's fine. Tomorrow, enter again and see if it gets filled. You get what I mean? Okay? So one of the things that I do for BSS to increase my win rate is to make sure I get very low entry price. Yes, I offer 20 cents, 20 cents, 25 cents. Then I go and sleep. Okay? Long-term contracts has a chance of the prices being filled here. Okay? So if you have 50 cents at $1, most people will just offer the middle, 75 cents, right? For me, I don't. I'll offer below 50 cents. Okay? If it feels good, doesn't feel, never mind. Tomorrow, re-enter and see if it gets filled. Okay? Yes, it's a long-term contract. Always keep in your mind, long-term contracts has very low liquidity, which means don't pay the price they offered on the brokerage. Okay? Yes, they both are entered on one contract. Okay, so they are entered as combo. Okay? Yes. The initial price is 50 cents. Okay, just now I was talking 50 cents bid. Okay, and $1 ask. This was what I was talking about just now, correct? Okay, 50 cents bid, $1 ask. Most people will pay the middle, 75. I don't. I'll just put 20 cents. 20 cents, 25 cents, and I will wait for the price to come to me. Okay, so this is one of the things I learned when I was doing bullish synthetic. I realized long-term contracts, right? Generally, if I pay the middle amount, it gets filled quite fast, which means, right, that's not the best price. Okay, I want to pay here. 25, 30 cents, that's fine. Enter as a combo. This is a combo trade, not individual trade, combo. Okay. You can do shorter DTE, but when you do shorter DTE, then you are doing what Adam is doing, short-term trading. Okay, this strategy I'm showing you is a long-term trading. Okay, long-term investing, long-term trading. I don't care about dividends. Doesn't matter to me. Okay, dividends 1 year, 3 years from now doesn't matter. It won't affect me. It will not cost me to have early assignment if I'm doing for 1 to 3 years. Okay. Normally I will look at the price. If it's very expensive stock, right? 1 year. Super cheap stock, maybe 3 years. Okay. Or same DTE. Sherlyn, same DTE. If I say 1 year, that means both legs 1 year. If I say 3 years, means both legs 3 years. What's the likelihood of being assigned short put? Low. Lower, if you follow what I share with you. Until closer to expiration, then the likelihood is increasing. Okay. At the start, unless the stock drops significantly, then assignment is possible, but very, very low chance. Okay, very low chance. You can use shorter DTE, then your bid and ask will be very narrow. Then you can use the mark price. Okay, but let me come back to this again. This session, I am not talking about short DTE. I'm talking about 1 year, 3 years DTE. Okay, can Okay, and important, I mentioned, never take too many positions. Okay, never take too many positions. And when a company's fundamentals deteriorate, cut your loss. If you enter a company that is great, and along the way, in the next 1 year, 3 years, the company's really messed it up. Revenue dropping, profit dropping, everything goes back. Okay? Take your loss. Cut. Take your loss, redeploy. Okay? It takes a lot of strength and courage to cut your loss. But once you cut your loss, you can move on in your trade. You don't cut, right? You are going to have sleepless night until the stock, if it recovers. So you must always cut if the fundamentals have already deteriorated. Okay? So clear? Is Lulu's fundamental down for me? No, Lulu is still doing okay. It's just that I'm not a Lulu fan. So I don't invest in companies that I don't really use. I'm a Nike person. I buy Nike shoes. I love Nike shoes. Okay. Every time I go any country, one of the places I must go is always the factory outlet and buy the Nike shoes at discount. That's me, cheapo. I am cheapo. I admit. Buy shares, must discount. Buy shoes, must discount. Me, cheapo. Okay. Okay. And if you're using BS for trading, have a predefined cut loss and cut when reached. This is what Adam is doing for trading. Cut your loss. Once the price drop, cut your loss. Okay. Okay. UNH and ELV. UNH, I am not doing a BSS because it's too expensive. $400 stock. You do a BSS, that's $40,000 notional value. Too high for my account. Okay. So I don't do BSS on $400 stocks. $40 stocks, yes, I'll do. Okay. Yes, okay. Now, so let me give you some examples. These companies, okay, which company do you think will do better than its current position, current stock price? I don't know what's their stock price. They will do better 5 years to 10 years from now. Tell me which company do you think will do better than now in 5 to 10 years? Meta or Yum China, Nvidia, Nvidia very popular, Palantir. See that? So if you know that, or you feel that they are going to do better, then the next question is this, which company do you think, or do you know, they are fundamentally strong companies? Which company do you think and do you know they are fundamentally strong companies? See that? You guys have your answers. Nvidia, Visa, Costco, okay? Fundamentally strong companies. So now I have fundamentally strong companies. I have companies that I think they will be better in 5 years, 10 years from now. Do I have my possible candidates for bullish and ready? Understand how you can filter out companies? Fundamentally strong companies. You think they'll do well? That's some of the criteria. Then the next question is this. Next question, which companies here do you think you can afford to buy 100 shares? Come, let's see. This one is slightly different. Some companies more expensive, some cheaper. How many of you, which companies do you think you can afford to buy 100 shares? Yum China. Yum China is quite cheap. Palantir, Google, Costco, Nvidia. Okay, so if you can afford to buy 100 shares, do I want to buy the shares or do I use a bullish synthetic to cut the amount I pay for the shares and still hold the 100 shares? So now I have my candidates. See that? So it's very simple. Great companies, you think you'll do well and you can afford to buy 100 shares. Those are the candidates. Okay. I will not comment on whether the companies are great or not. You guys know it yourself. Okay. And you know these companies, they are more well-known. Okay. So if I know these strategies 5 years ago, probably I'll own all of them. But now, are they really undervalued? I don't know. Okay. So you have to make your own analysis. All right. Okay. So now let's go to the actual setup of the bullish synthetic. Number one, a bullish synthetic has a long call, which is a limited loss trade. Okay, limited loss trade. See that? But the profit is unlimited. Okay, now I am not going to revise through what Adam has taught for basic options, but I'm going to explain it in a very simple manner. A long call, basically, your max loss is limited, but your max profit is unlimited. Everybody clear about here first? Max loss is limited and max profit is unlimited. Everybody clear about what is a long call? Yes? Yes, okay, good. And a short put is the other way around. Profit is limited. Profit is limited, but the loss is unlimited. In fact, it's limited. It's all the way to zero. Okay, profit is limited and the loss is unlimited. Okay, to zero. Everybody clear about what is a short put? All clear? If you clear, please let me know. Yes, clear. Okay, about short put. Because this is the most important thing you need to know about a bullish synthetic. One long call pays premium. Short put, collect premium. Okay? Can I? Yes, short put is the same as sell put. Okay, it's the same as sell put. Short put, basically, if you sell a put or you call it short put, your maximum profit is limited to here only. Maximum profit. It will not go higher. Even the stock price goes up, it will not go higher. But your loss is when the stock goes to zero. Stock goes to zero, so that is a short put. Okay, now when I combine these two into a combination trade, right, what happens is it becomes like this, the white line. Today, it becomes like this. So let me repeat again. If you take these two, okay, these two, and you combine, you will get this straight line. Okay? Now, you don't have to know how this line is created. You just have to know that a long call plus a short put, you get a straight line. Everybody understand this first? And long call plus short put, like this. Okay, same strike, same strike, same DTE, everything same. Everything same. It's just that one is a long call, one is a short put, you get a straight line. Okay, so this part, please give me attention here. As of today, your profit and loss is the white line. As of today, but over time, your profit and loss is the green line. Okay, over time, your profit and loss is the green line. That's right, Chiang, you are correct. It has the same profile as owning the shares. Slightly more vertical. Okay, but it's very similar to holding on to 100 shares. Yes, it's as good as holding on to 100 shares. Okay, so you will see that over time, right, your profit will drop. Today, the profit could be here. Then on expiration, the profit drops. Okay, it's because of the time decay and the premium you pay. So every day you pay some premium, eventually you need to make back more in order to break even. Okay, so main thing is just remember a long call and a short put, same strike, same DTE, is literally a straight line, a diagonal line. Okay, any questions up to you guys? Any questions? No? Why is the short put loss unlimited? Actually, it's limited if you go to zero. Okay, the limit loss is when the stock goes to zero. It is limited. You get the shares, but the shares can also go to zero. So it is still all the way to zero. All right. Straight line means it's like a stock. Stock goes up $1, it goes up $1, something like that. Okay. Yes, I can. Can I choose more than 3 years DTE? That is if the brokers have that DTE. Most brokers don't have more than 3 years. Okay. In fact, I don't think that I can see any that's more than 3 years. Okay. Can I? Yes, this is definitely better than LEAP. A LEAP long call is just this one. The win rate is low, plus you pay more premium. Okay, so I do the short put to cover some of my premium. Okay, bullish synthetic and bullish synthetic spread is the same. It's just different name. It's the same. Okay, okay. Now let's move on. Okay, so an alternative version, which some of you asked just now, alternative is the long call and the short put. Alternative version. Let me show you alternative version. They have different strike. This different strike, but same DT. So the moment you have different strike, you have this like a stair. Okay, it's a stairs. So it's a buffer zone. Okay, so some people like to do same strike, some people like to do different strike. Okay, I like to do same strike. That's my style. You want to do different strike, nothing wrong. You can still do it. Okay, so it's up to you. You want to do same strike or different strike. My preference is same strike. Okay, save me the trouble of thinking. I'd like to go simple and profitable. That's me. Okay, now, so here's a trade setup. You buy a long call, you sell a put, same strike, same DT. Simple as that. You buy a long call, and the problem with a long call is the theta, which is the time value, will decline, and the volatility also will decline, and it works against you. Long term, you will lose. Okay, straightforward. If you buy a long call, straight long call, the chances of winning probably just 10%. Okay. However, if I do a sell put, the theta works for you. That means if the stock don't move, you still make some money. Okay, while a decline in volatility hurts you. All right. So your aim is to sell the put to reduce the overall cost of the trade, to make it cheaper. All right. And ideally, you want at a strong support below intrinsic value. This is the setup. Stochastics, ideally oversold. Not necessary. Again, not necessary. But if you have, good. Don't have, never mind. Most important are the rules that I've shared with you just now, when to deploy. Okay, stochastic is a bonus. So let me give you a real example that I have traded. Okay, stochastics daily is fine. Jimin or Halim, basically for this strategy, we open both legs as combo, we close both legs as a combo. Okay, simple method will be both. Later I will show you one method that I use that I close only one leg. Okay, but basic is open both together, close both together. Okay. Okay, so this is Microsoft, and Microsoft, right, when the stock came down to a support, can you all see this support? Support level, support level, support level, support level. Can you all see this support? Now, question. Guys, would you agree with me that this is a strong support level? Would you agree with me that this is a strong support level? Yes? Yes, I? Okay, very good. Next question is this. Without even looking at anything else, would you agree with me that Microsoft is a great company? Would you agree with me that Microsoft is a great company? Great company, strong support level. Now, let's assume that I did my calculation and I say, let's assume my calculation tells me the intrinsic value is $400. Okay, let's assume intrinsic value is 400. I've done my calculation. Let's say great company, support level at this price 280 plus, is it considered undervalued? At 280 plus, is it considered undervalued? Yes, it is. Okay, now question, guys. If you are me, if you are me or if you were me at that time, at this level, 285, and you know how to deploy a bullish synthetic, how many of you will go for it? Let's see. Assuming you don't know what's going to happen in the future, at 285, assuming the intrinsic value is 400, at the strong support, would you go for this? No brainer. If I know all the data at Microsoft, what's there to think? See that? So what I did was I went for it. Okay, I went for it, and this is my trade. Okay, my entry is to buy a call at 285, which is here. I buy a call at 285. I bought a 21st June 2024 trade. Okay, this was 2022. 2022, I bought a 2024 trade. See that? That is a 2-year trade. So I sell same date, same strike, put at 44.57. Okay, guys, let's do a quick calculation. How much premium do you think I paid? Based on the data provided, I bought a call at 54.60, sell a put at 44.57. How much premium did I pay? In terms of dollars, about approximately 10.03. Agree? So your premium will be 54.6 minus 44.57, 10.03. So everybody clear about here first? All clear about the premium portion? How much premium? Clear? Okay, good. Next. Your max risk will be 285, which is the strike price minus the premium paid times 100, because one contract is 100 shares. Now this is one contract. Max risk will be 27,497. That's the max risk. Worst case, Microsoft goes to 0. Okay? Question, guys. Question. If you were me at that time, do you think Microsoft will go to 0? What do you think? Yes or no? Do you think Microsoft goes to 0? I didn't think it will go to 0. I didn't think. To me, Microsoft will never go to 0. But I factor in a 40 to 50% drop. If it goes 40 to 50% below, I'm losing about $13,000 loss. If it goes to 50% loss, yeah, I lose about 13,000. Now, is $13,000 reasonable for a short-term loss on Microsoft? Assuming that I know Microsoft is going to go up in the long term. Is it a reasonable amount? Depending on your account size. If your account size is slightly larger, it's reasonable. But I don't think it will go to 50% loss. Okay, so if you can take the risk, then it's okay. Okay, that's why I say you must have the money to take the loss somewhere. Where, I don't know. Okay, you must take the short-term loss if you need to. Okay, good question. Why is it minus and not plus? Because this premium, unless you allow it to expire or contract expire, when you close it, you will collect back the premium. There's no difference. Okay, that's how synthetic works. The premium, when you close it, you will collect back the same amount of premium, so it will reduce your max loss. Okay, this one was about 2 years DT. Okay, 2 years DT. So what happened was, okay, by the way, the premium is given by the options chain. This is the $54.60 I pay for the option. Okay, so my buying power block will be 30%, which is 8,249. Okay, that's my buying power block. Yes, when I close both. I close both. Okay. If the short put gets exercised early by the buyer, it's good. Okay. If your short put gets exercised earlier, that means the buyer is giving away free tether, free money to you. It's a good thing. Then you just reopen your short put again. Okay. So if the buyer exercise, it's because the buyer dumb. Buyer not very smart. Because there's time value in the trade. So if your trade get exercised by the buyer, don't worry, it's a good thing. You get free money. Okay? Can I? Okay, now, next. Is the short put premium always smaller than the buy call premium? Not necessary. Sometimes it's more. Okay, but it won't make a difference. The premium is not a significant factor in this decision making. Sometimes it can be positive, sometimes it can be negative. In fact, just the other day, I took one that's negative. Okay, so it is possible. Okay, good. So here's the risk profile. I buy and sell at 285. I pay a premium of 10.03. My break even will be 295. 285 plus 10.03, you get 295. Okay. No, David, I did not pay 10.03. Okay, the debit is 10.03. Yes, that's the premium. At the same time, is if I close it before the expiration, right, I will get back this 10.03. So it's not a concern. Okay, so it's not a concern. Huh? So main thing is the buying power block. Some of you are asking here, 8249. Okay, buying power. So I must have 8249 worth of cash in my account. That's all I need to control 100 shares. Okay, so break even will be at 285 plus 10.03. Is it always 30%? Nope. Could be sometimes 30, could be sometimes 40%. Okay, now, so break even price will be 295.03 on expiration. So let's look at the trade. Okay, let's look at the trade. The trade was entered at 285 here. 285. Okay, it went up, it came down. Now, question. When it came down, what do you think happened to my account? It went up, then came down, went up, came down. When it was here, bottom of COVID, what do you think happened to my account? Yes, I have a short-term loss. Okay, so 285, it went down to about 200 and what, 210. So I lost about 35K, about that. Okay, so what happens is, because it's a 2-year trade and I have the cash there, I don't really care. Short-term volatility is not my concern in this trade. Head on to the trade, expired here. Is this a profit or a loss? Is this a profit or a loss? Profit. How many of you would love this kind of profit? Nice, right? Okay, now the question is this. If this is not Microsoft, but it's some other company that you are taking a speculative trade, would you dare to hold on to it here? Would you dare to hold on to it here? No, you will not. You will not dare to hold on to it. But if it's Microsoft, the conviction is there to hold on to it. That's why I say from the start, I will deploy this only on companies that's great, that I am willing to hold in the long term. Okay? Yes, it can trigger a margin call, definitely. Okay? Yes, the paper loss of about 25K. All right. So now, even if you close it, even if you close it here, you can just take the loss, reopen at 210. That means you close the trade, then you open another bullish synthetic at 210. You can do that. Nothing wrong. Okay? Can I? Okay. So here's my exit. I reverse the trade. Instead of a buy call, now I sell call. Collect back $163.37. Microsoft, my long call, so the put itself is going to expire. Yes, only 1 cent. So net premium collect back is 163.36. Now my realized profit will be 163.36 minus the premium paid times 100% or times 100. Total profit 15,000. Okay, buying power block is 8249 and my ROI will be 185.8. Okay, good question. Did I allow this trade to expire? No. The trade has 1 cent. So I close it just before expiration. Okay, I close it just before expiration. So I did not allow this trade to expire. Okay, now would this consider a good trade? Would you all consider this a good trade, a long-term profit that is reasonable for having the faith in Microsoft? Okay, good question, David. If Microsoft pays dividend, you don't get. Okay, so you don't get dividends on a bullish synthetic. All right. Now, yes, it's possible to close it. It's possible to let it expire, but I don't like to let it expire unless there's a reason to do it. Okay, most of the time I will just close. Don't have faith in me, John. Must have faith in the company you're investing. Okay, I'm just showing you how I trade, and if you think it helps you, go ahead and do it. Okay, so here's an example. Somebody asked just now in the chat, can we do it on TLT? Why not? This was what I did. TLT's price was around here. Okay, TLT here. Now, okay, let me answer one question. Make a comment on Lu Yan's what she said. Taking a 25K hit during COVID requires mental strength. Agree. When most people are jumping and say end of the world during COVID, I was having a lot of fun doing bullish synthetic because those are opportunities that comes once in a decade or even a lifetime. Okay, so during that time, right, I love bullish synthetic. That was how I built my account. Okay, great companies oversold, dumb reason. That's for me. Okay. Yes, I waited 2 years to close because it was a 2 years contract. All right. Now, next, TLT, I bought a 30th September 97 call here. 97 call, cost me $6.07. Sell the same strike, 97 put, I collect back 477. Now, question, what's the premium I'm going to pay? What's the premium? What's the premium I'm going to pay? $2.70. You sure? No, is it 270? No, it's not 270. Calculate properly. Hey, basic mathematics, please check. 130. Okay, 130. Okay, so it's 130. So max risk will be 97, which is a strike, minus 130 times 100, 9,570. Now, question. Am I required to put up the full 9570? Am I required to put up the full 9570? No need. Okay, no need. All right. So I just put up 30%, which is about 2871. 9570 times 0.3. Yep, about 2871. Okay, so that's the amount that I require. Now, of course, my account cannot just have 2871. I must have more than that. If not, I will get margin call easily. Okay, but minimum 2871. So with 2871, I get to hold and control 100 shares. All right. So same thing. Risk profile is the white line. $97 is strike. Premium 130. You add this up. Break even 98.70. Okay. So what happened to TLT? It went up, came down, went up, came down, went up, came down, then came back up, slightly higher. Exited around here. Now, do you think this is a profit or a loss trade? Do you think it's a profit or a loss trade? This is a profit. This is a profit trade. Okay. How much would I pay on margin call? I'm not sure, Craig, what you mean by how much would I pay on margin call. Okay. If you are talking about buying power, you need at least 2871. Okay. Ideally, you should have at least twice the amount in your account. Minimum twice the amount. Okay. But the other 2871, you can use it to do something else. Okay. But minimum at least twice the buying power required. Okay. Can I? Okay, good. So let's come back to this trade. So this trade ended up, I have to close the trade by selling the call at 413 and buying the put back at 0.22. So net, I am collecting back $3.91. So $3.91 is what I collect back. I paid 130. The difference is $2.61 times 100. My realized profit is 261. Okay, so buying power block previously we discussed is 2871. Return is 9.09. Question, is this considered a very good return? Is this considered a very good return? No, this is not. This is 9%. I got away with it. It was a trade. Okay, it was a trade. I took a bet, and well, this bet did do well. It could go down. If it goes down, I'll just close the trade, take the loss, reopen again. Okay. Generally, I will close about 1-2 weeks before. Generally, I'll close about 1-2 weeks before. Okay. The strike price is the strike that's closest to the current price at the money. Okay. So those of you who learn option is at the money. Those who did not learn option, just choose the strike that's closest to the current price. Okay. Okay. Let me give you one of my favorite. Bullish synthetic on triple Q. Now, this one was the conversion. Remember I told you I converted my shares to bullish synthetic? So what I did was I was buying triple Q throughout my journey in trading or investing. Buy 5 shares, 10 shares, 5 shares, 10 shares. I just continue buying. Okay. And at that point, right, my average price was 229. So I sold all at 363. My profit already collected 28,000. Already collected. So I sold everything. Then I reopened a bullish synthetic at 394.78. That was the contract. 2025. Okay. So it cost me 45.93, and the put I collect back 24.93. Difference is $21. This is the premium I'm paying. Total max loss will be 394.78 minus 21 times 100. Okay, this is a standard calculation. 37,000. Buying power block 30%. So main thing is what I did was I just sold away the shares. Yeah, I sold away the shares and opened a bullish synthetic immediately. That's what I did. Okay, why? Now I remember this happened right when I was doing a webinar similar to this one. Similar to this one. It was that webinar. So on that day, the share price dropped significantly. It literally dropped this way. So to me is, hey, why not? Go for it. It's a support. How often do you see triple Q come down this way? So I just converted. Okay. So I converted and I bought more shares. This is a risk profile, standard risk profile. Okay. And the triple Q was here, converted here, ended up here. Now, question, do you think this is a profitable trade? The entry was here. Okay. The entry was here. Definitely profitable. Okay. Now, why am I so confident of this? Simple reason. It's triple Q. I have confidence in the big tech. I have confidence in AI. That's why I dare to do it. Okay. But if you have no confidence in the company that you're investing in, please don't do bullish synthetic. Simple as that. You must have the confidence in the ETF, okay, in the companies that are doing it. And as I said, don't do too many. Just do sufficient that you can handle. Okay. So end up this trade, very nice profit of 10,000. Same thing, I close it. It was a $10,000 profit. Okay, return on investment 88.7. Now, so you will see that there are many examples that you can deploy a bullish synthetic. But what's more important is, do you realize when I deploy it, I always deploy it at a strong support, and I deploy on great ETF or great companies? That's what I do. Okay. TQQQ. This was the one I was talking about. It came down. It doesn't make sense for me not to enter it. So at that time, enter another TQQQ at 57 strike. Cost me 1564. Collect back 1562. 2 cents premium. This was the one I was telling you. I did not pay what the market was asking for. The market was asking for 30 cents to $1. I put a 2 cents order. I went to sleep. And it got filled. Yeah, I put a 2 cents order and it got filled. And in fact, this happened many times in my bullish synthetic journey. I put an order that's so low that under normal situation wouldn't be filled. Yet, on a long-term option, it can be filled. Okay, so this one was almost 2 years, almost 2 years straight. Okay, is it on a bullish market? Good question. Craig, do you think this is considered a bullish market? What do you think? When this happened, how many of you honestly, you will not dare to touch triple Q? You look at this, would you dare to touch triple Q? Most people will not dare to touch. Yeah, unless you know the company. Okay, so when we enter, right, a lot of times we enter on the low. If the market is bullish, there's no chance to enter. We want to enter when the market is at the bottom, when it has pulled back. Then we enter. Okay, but it takes a lot of courage to do it. That's why I say, if you know your company, you have done your research, then it makes sense for you to enter here. If you have not done your research, you just go in and take a speculative trade. Generally, it's very dangerous. Get it? Okay, TQQQ is 3 times triple Q. Okay, 3 times triple Q. So you can see there are many trades like that. I'm not going to show you everything, but you can see that it works. Okay, it works. Now, TQQQ, let's say now I want to close out. This is the options chain based on yesterday. Let's do a quick exercise. If I want to close it, 57 call, 16 January, which is this one. 57 is here. I want to close it. I have 2 prices, 31.65 and 34.85. Which is the price I can close? Which is the price I can close? Can I close? I want to buy back. I want to sell the call. 34.85. Ideally, it's 34.85. But the thing is, sometimes it's hard to feel. So can I take the middle? Can I take the middle price? Roughly the middle? Okay. Now, let's say I just take 33. Assuming I just take 33. Okay, take the middle price, 33. Okay, would 33 be a fair amount here? Would you agree? 33 fair amount? Okay, okay, next, my put is here. 375, 390. What's a reasonable price to fill? 380. Okay, good. 380, 380. Okay, 380, okay. Now let's do a quick calculation. So can I put 57, call this is 33 here. Can you help me do a quick calculation? 33 minus the original 1564. How much is that? 17.36. Okay, times 100, so it's 1736. Okay, then the put will be 380. How much would this be? 1182. 1182. Can you help me calculate what's my total profit? 1736 plus 1182. How much? 2918. Okay, 2918. And if this is 2918, can you help me calculate what's the return on investment? How much is that? How many percent? 2918 divided by 1709. 170.7%. Question, guys. Is this a good trade? Is this a good trade? Looking at the trade itself, to me, this is one of my best trades. When the market came down, hit a very strong support, when most people will be so scared of entering the market, I entered because there's a reason to enter. See that? Okay, so trading can be that you don't do triple Q, you don't do triple Q, you can always do some other companies. But main thing is the stock you choose, you must know what you're doing. Okay, what's the risk of this company or this ETF? The risk is if triple Q goes down $1, T triple Q goes down $3. So this trade is considered high risk. This is considered high risk trade. Okay, so but the idea is, do we enter when the market is on an uptrend, or do we enter when it's on a retracement? What do you think? Retracement, yes. We always enter on retracement. So there is always some companies out there, even on the uptrend market, there are always some companies that will be hit by short-term news. So those are the ones that we want to consider. Okay? Can I? Okay, let's move on. This is another one. This one, I love it. Okay, TSM came down, bounce off moving average. See that? Bounce off, very nice uptrend. So when it came down, yes, you have to check fundamentals. This strategy that I'm using, fundamentals are important. Okay? Can I? So bullish trade on TSM, still open. 195 call, 31 10 cents. This is not 97 put, it's 195 put. Okay, let me change this. This is 195 put. Okay, so this is 195 put. Premium $2. It's a $2 trade. Okay, this is another one where it's long term and I bargain. They were asking for $5 to $10. I put $2. Okay, and it got filled. So maximum risk is 1,930 after deducting, okay, the premium, and maximum buying power block will be about $579. Now this trade, okay, 195 is this one, 195. Long, the call is here, 51.90, 52.40. Now what's a reasonable price, okay, to pay? Let's assume I pay here. What's a reasonable price? What do you think, guys? $52.15? Okay, now let's make it easy, 52. Okay, let's just put 52, 52. Okay, let's use whole number. 52.1, nicer number, easier to count. Okay, then the put will be 625, 640. Okay, let's use 630. Okay, let's just use 630. Okay, 630. 630. Okay, so this is 52.1 minus 31.1. This is how much? 21, correct? 31, and this is $6.30. How much is that? 29.1 minus 630. 22.8. Okay. 2280. Okay. So please help me calculate what's the profit. 2100 plus 2280. Profit 4380. Okay, so this is 4380. How is the ratio? 105 put is wrong. Where's my work? Oh, sorry, this is 195, not 105. 195 put. Okay, thank you. Okay, 195, and this is 195. 756.47. So high. Really? 756.47. Okay, now, guys, everybody clear about the calculation? Now take note, this number may not be correct because I screenshot this last night. Okay, so the data may not be accurate. I think I did it when the market was closed. Okay, but later we will see the actual trade in my account. You will see my account. I will show you the actual trade. I will show you my PAM. Okay, can I? Okay, so guys, up to here, is everything clear about this? PSM was my DTE, that 16 January 2026. Same strike. It's same strike. It's typo. It's a 195. Okay. Usually I will choose 1 to 2 years. I use more for investing. Yeah, I use more for. Will I close early? Depends on my mood. But at this moment, I don't think I'll close so early. Okay. At this moment, I don't think I'll close. Now, here's something interesting. Palantir. How many of you regretted not buying Palantir? Let's see. Let's be honest. Anybody here regretted not buying Palantir? You missed the ride. Okay, good. Now, Palantir was one, right? I had some shares, but I've sold it off to convert into a position. I did this with the intention of a trade. It's just a speculative trade. Okay, but this is a trade that turned out well. Okay, so it was around here that I started about $20. So what happened was, now this one I'll just go through the numbers. I did a $20 call and put, paid $7, received 6. Net is 1. Okay, and the max risk will be $20 minus 1 times 100, 1,009. Buying power block 570. Okay, expiration 16 January 2024. Up to here, everybody clear about the calculation first? Are you clear about the calculation? All clear, all clear? Can I? Okay. Let me show you what happened. After I entered, Palantir dropped. Okay, from $20, it dropped to around here. Okay, around here. So Palantir dropped after I entered. So question, guys, is it a profit or loss? Yeah, I entered roughly here, Palantir dropped, recovered, then came back here. It's a loss. This was a loss. Okay, so what happened was the trade ended up as a loss. Okay, so the long call ended up with only 24 cents. I paid $7, left 24 cents. So it's a loss of 676. Okay, but I have 20 put aside. Okay, these 20 put are aside. I allow it to expire. So if I allow it to expire, I collect the full premium of $6 times 100. So if I lose 676 and I collect back 600, my loss is $76 per contract. So everybody clear about the loss here first, just purely on the options portion. All clear about how I lost in the options first? Everybody clear this portion? Can? Yeah. Okay, now remember I got assigned. So I got assigned a share at 200, but the share price was 1678. So ended up, I lost another $322 on the share itself. Okay. So my total loss for one contract is 76 plus 322, 398. Is this portion clear for you? Is it clear? Clear? So this was a losing trade. This was a losing trade. Not all the time you get a win trade. But to me, lose doesn't matter. What matters is you must know what you're doing. To me, it's a cheap trade. It's a speculative trade. Stock price came down. I made a loss. Okay. The long call, I paid 7, only got back 24 cents. So I lost a total of 676. But the short call, I allow it to expire. I get back 600. Allow it to expire means I get the shares. Okay. So 100 shares were assigned at $20. Is it $6? Correct. 100 shares assigned at $6. Okay. So if it's assigned at $6, the price after that will be assigned at $20. So $20 minus 1678, that will give me 322. Net, the loss will be 398. Oh, so correct. Because the long call is 7. Yeah, I paid 7. Did I pay 7 or 6? Let me see. Yeah, long call was 7, not 6. So correct. Okay, so long call was 7. So net on the first trade, it was a loss of 398. Okay, it was a loss of 398. Now, so what happened was, close the trade, I sold the share away. Okay, I closed the trade here, sold the share away, and open a new trade. Okay, open a new trade for another 2 years, $15. The long call is 632, short call 393. Net premium was 239. Break even will be 15 plus 239, 1739. Okay, now, so this one was a new trade. And eventually what happened was Palantir went up. Do you all remember? Palantir went down, then eventually went up. So when it went up, right, I closed this sell put. I didn't close the long call. I just closed the sell put because most of the premium is gone. I decided to roll it. Now, this is more advanced already. This is more for those of you who already know options. So what I did was I closed this one. Okay, I closed this one. So it was rolled to 55 cents. Okay, so this one was closed and reopened. Okay, now you don't have to bother about the actual calculation. What you need to know is I close only one leg. Instead of combo, I close only one leg. So when that happens, I collect new premium. Okay, new premium. So end up, the profit from closing the put was 393 minus away the 55 cents. I get 338. So this is a profit. So just now, I make a loss. Remember just now I make a loss over here. 398. Just now I got a loss 398. Now I make a profit over here of 398 or 338. So net, is it still a profit or a loss? Just now was 398, now 338. It's still a $60 loss. Still a loss. Okay, but remember my long call is still in play. Okay, my long call is still in play. So now I continue my trade, and my new position will be 33 put. This is a new one, and the original is 15 at 632. Okay, this is original. So you will see that I have two different DTE. Originally, the date expiration is the same, but because I roll it, it becomes different. Okay, so now based on yesterday's options series, let's look at this first. 16 January 15 call. This one, 16 January 15 call. 15 call is here. It's between 133.2 and 135.05. What do you think is a good price I can put here? A fair price. 134.5. Okay, let's put 134.5. Okay. Now for the put, it's 1 cent and 3 cents. What can I put? sorry, the put is not this one. Okay, the put is here. 33 put. Okay, the second one is 33 put. 33 put is 80 cents and 116. Okay, I put. Okay, let's put 95. Easier. 95 cents. Okay, so let's do a quick calculation. If I close today or close yesterday, 13.4 minus 6.32. Can you help me calculate how much is that? 13.4 minus 6.32. 7.08. Okay, and the 33 put is what? 7.35 minus 0.95. How much is that? 6.4. Okay, Elisha, the numbers came from the previous slide, okay, which I think you have missed the previous slide already. Okay, 134. Sorry, 134. Salah, wrong. This is 134. My bad. This one is 134, not 13.4. 134. Can you help me calculate this again? 134 minus 6.32. 127.68. Okay, so it's 127.68. Okay, so so 127.68 is 127.68 plus 640. How much is that? 13408. Okay, 13408. So everybody agree here I made a profit of 13,408. Everybody agree with this? Okay, don't worry about the exact calculation because in the course, right, we will teach you how to do that. But would you understand that I made a profit here? Yes, later we will minus again. Later we will minus the $60. Okay, so once this is clear, let's go through 13408. Let's add it back here. Plus 13408. What's my total profit? 13468. Correct? 13468. Agree or not? 13408 plus 338 minus 398. 13348. 13348, correct? 13348. Agree? Now this is for one contract. This is for one contract. Okay, so remember just now I said this, if you are trading bullish synthetic on speculative trade, take small positions, and that was what I did. When the price was very, very low, okay, when it was $15, what's the most I'll lose? 1,005. 15 times 100 per contract. So at that moment, I dare to play. I dare to trade this, okay? And I'm taking it more of a speculative long-term trade. So when the price is low, right, this is something suitable for the small, or should I say mid-sized account holder. If your account size is not huge, please don't go and do this on United Health or some of the very pricey companies. Do it on the lower price companies that is still undervalued. Okay, now with this, right, let me show you my actual P&L. Okay, my actual P&L. This was my actual P&L. All the trades that I did for bullish synthetic on Microsoft, okay, all the way to The most recent, last 2 nights ago, Oscar. Okay, it's not, this one is not expired. Oscar, just entered only for credit. This is the only time I ever get a credit for this trade. Most of the time it's a debit. Okay, so net, my close position, I'm earning about $26,537 for bullish synthetic, And my open position at this moment is 94K. Total profit, and okay, remember I told you I got Google and I got assigned Google. So total profit from bullish synthetic is 124,000. Okay. That time I took Palantir 5 contract. It was a 5 contract. Okay, guys, question. If I don't have a large account, can I still trade the lower price stocks using bullish synthetic? Can I still do that? $97 stocks, $90 stocks. I can do that. I don't have to trade the big high price stocks. Okay, the only high price stock that I traded at that time was Microsoft. Okay, triple Q was a conversion. So triple Q is not because it's high price. Okay, yes, you pay the premium first, then when you close it, you collect back the premium. So net, no difference. Okay, can you trade using Robinhood? I'm not sure. You have to ask Robinhood. All right, IV doesn't really matter here. What matters is fundamentals. Okay, now, then the question is this. Is it really profitable, or is it just YY is profitable? Let me show you what some students who have been trading bullish synthetic since last December, this is what they went through. Okay, they learn it, they make their profit. Joshua is one. Sui is another one, very, very hardworking student. Went to do bullish synthetic, get very good premium. Okay, you can also see there's Matthew. Okay, most of them are trading bullish synthetic, and they are combining it with all other strategies they've learned. See that? Matthew earned 37K just in June alone. 16% outright. Okay, what's their whole period? Now, it depends on individuals. Some of them, whole period could be 6 months to a year, some 2 years. Okay, it depends on individual. But you can see it's proven that with the right strategy and the right group of people trading together, it can be profitable. And that's what we want. We want a group that can help us. Okay? Here's another one, Ben. Okay, trading bullish synthetic, managed to do around 18K using a 90K capital. Doing very well. See that? Okay, Joshua, another one, United Health, bullish synthetic, 130% ROI in just 5 days. He used it to trade, not investment, but trade. Okay? Matthew, TDD, trade desk, bullish synthetic, 1.2K. And many of them are doing it. So it's not just I am the only one who can do it. In fact, many students did it, and now some of them are predominantly trading this strategy. Okay. Yes, if they are sharing, most of them will share their trades. Okay, so it's dependent on individual. You can see there's so many examples. This is, I think, today. Today, some of them just make money again. $600 within a day. See that? Now I'm showing you all these things just to show to you that it is a strategy with the right skills, right mentorship, and right community that allows you to trade profitably. It doesn't mean you need huge capital. Small capital, medium-sized capital, options is one of the, in fact, it's a must-have for any traders. If you want to be successful in trading and growing your investment or trading account, options is the way to go. Okay, you just buy shares, yes, it's safe, but it doesn't exponentially grow it. Okay, can I show examples how others without skill get burned? I can't show because I have not seen, at least for bullish synthetic. Other strategies, yes, at least for bullish synthetic, most of them at this moment are doing well. Okay, at the same time, I have warned them not to overtrade, because once you overtrade, that is where things start to go wrong. Okay, so as long as you don't overtrade, you follow the rules I've mentioned to you. Great company, undervalued, you manage your risk, don't take too many trades. Definitely is a doable strategy. Overtrade means this: if you have 100,000, please don't go and trade $300,000, $400,000 worth of shares. 100,000, maybe you trade 150,000, that's fine. Okay, yes, can, yeah, okay. Now, next, remember I told you I'm doing bullish synthetic after I've grown my account. Now, not because I purposely did that, but because before that, I didn't understand there was such a strategy. So before I grew my account, the strategy that was my go-to for small accounts. Now, how many of you here, you have a small account? How many of you have a small account? Small account means anything less than 100,000. To me, anything less than 100,000 is considered small. My account was considered small. Okay, now small account holders, there's a limit to how much we can do for other strategies, because if we don't get enough premium, then it's hard for us to grow the account. Agree? So here's my go-to for small account holders. Okay, now small account holders, one of the things that we want to do is this: we want to risk small to get big. Would you agree with me on that? Just now we risk big to get big. Now we risk small to get big. Okay, so how small is small? Now, how many of you are okay with a $200 to $300 risk for a trade? That means the worst case I lose $200-300. How many of you okay with that? $200-300 risk. Okay with that? I can trade already. Okay. If you have a $200 to $300 account, this strategy that I'm going to show you, second strategy here, is one of the best for me to start. Okay. So how many of you are ready to learn this strategy for small, medium, or even large account holders? Okay. Now, so let me show you how I did it. I have 3 small accounts. The one that I told you was pure bull call spread was this one, 3.5K, and I grew it to 10K. This is within a period of 3 years. Okay, this was a period of 3 years. Okay, now this 3 years was because in between there's COVID. That's why it got delayed. In fact, I did it within 1.5 years. Okay, I did it within 1.5 years. My small account over here, okay, it grew from 3K to now about 9K. It's small account. All these are very small account. Now this one, like Adam mentioned, is one of the small accounts that I manage for my company. It started with 50K. Now, the last I checked this morning was 121. Okay, these are all small accounts. Okay, so small accounts can grow with the right skills, can grow. It takes time to build. Okay, don't expect it to suddenly grow within 2 months. It can grow. You have some wins, you have some losses, but net should be profitable. Okay, so this is how I trade. I trade a bull call spread. It's cheaper, lower time decay versus a straight long call. A long call, low winning rate, bull call spread, slightly higher winning rate and cheaper. Okay, bull call spread can work in your favor when managed correctly. Okay, and one win can offset multiple losses. Now it's slightly different from bull put spread. Bull put spread is the other way around. Okay, bull put spread time decay works in your favor most of the time, and you need multiple wins to offset the losses. Okay, but bull call spread is the other way around. One win, offset multiple losses. And it's easy. No need to roll, no adjustments. Fire, exit, that's it. Okay, very suitable for new traders. If you are new, no experience, then I would suggest bull call spread or bull put spread, which Adam shared. Okay, small account required, max loss usually $200-300. And you don't have to manage so many trades, because you really want to get a very high quality trades, just 3 to 5 a month. Okay, no, it's not. Ken is not the same as bullish synthetic. It's not. In fact, right, bullish synthetic exponentially grow the account. Okay, bullish synthetic, I'll call it an atomic bomb. Okay, atomic bomb, it can grow your account, it can also bust your account if not managed well. But bull call spread is more like a pistol. Okay, but this is a strong pistol. You fire one at a time, you kill your enemy, and you run. That's what bull call spread is about. Okay, so it's lesser trades, but we choose our trades. Okay, so what's a bull call spread? Basically, bull call spread also two-legged, long call, but this time around, instead of a short put, we do a short call. Okay, so instead of a short put, we do a short call. So the trade, instead of a straight line, now will look like this. This is how the trade looks like. Limited loss, limited profit. So even if the stock gaps down, am I worried? I'm not. I'm not worried at all. Okay. And if it gaps down, I already know my loss. I'm not even concerned. Lose. I'm already prepared for a $300 loss. What's worse than that? If I do a stock, I buy the stock, it could get worse than that. Okay. So this is the strategy that Adam introduced to me, and he decided to abandon me. This is the strategy called bull call spread that he taught me. After that, he go and join bank to do credit spread. Traitor, join the dark side. But I continue trading, okay? Because it's low cost and it's suitable for small account holders like me. Okay, yeah, this is the one that I love because very low cost, I can sleep well at night even if things go wrong. All right, so how the trade setup works is this. You buy a call, okay, at one strike. Okay, basically, to simplify, you can buy a call at the price that is nearest to the current price. That's it. At the price that's nearest to the current price. And you sell a call at your target. Okay, at your target. So I buy here, I target at the top, that's my sell call. Simple as that. Everybody clear about the setup first? Before I move on to the exact example, I buy a call, I sell at my target. That's it. Everybody, are you clear about the setup? The chart looks similar, but not exactly the same. Okay, so the aim is I enter at the current price, I sell higher. Simple. Okay, so here's an example. If I have Citibank at $63.21, okay, I buy the nearest price, nearest strike, okay, and it costs me $2.41. So I pay $2.41. All clear about payment, debit $2.41. I buy, I pay. Okay, and I sell at my target of $67.50, collect back 53 cents. This is what I receive. Now the collection is to minimize the total cost of the trade. Okay, the net premium is 188. This is your max loss. Okay, worst case scenario, we lose 188. That's it. We will not lose more than that. Okay, now guys, if you have a small account, a loss of 188, is it reasonable? Is it acceptable for you? Is it acceptable? $100, $188 loss. Is it acceptable? It is. Low cost trade. I don't have to take thousands of dollars of risk. $188. Okay? So the cost spread reduces the cost, lowers the break-even point, but limits profit. It's not unlimited profit. There's a trade-off. Okay? It's $1.88 times 100, correct? 188. Okay, not 188 times 100, $1.88 times 100. Now this one, ETE, right? 30 days only. 30 to 45 days. Okay? So the aim is in and out within 30 to 45 days. No more long term. Long term was bullish in decade. Now, sometimes I don't want to do short term. I can go for bull call spread. Okay? So here's how we trade. We enter here when it bounces off a strong support like this. See that? Bounce off a strong support. So I enter here. I aim to exit somewhere here. You get it? So the target is it must go up. Okay? Target is it must go up. Frank, no need delta. I don't care about delta. I don't care about IV. All I care is it must be a strong support and it must, I enter at the price that's closer to the current price. Whether 40 delta, 45 delta, doesn't matter. Doesn't matter to me. Okay, of course, if the IV, the implied volatility is high, then it will be expensive. If it's low, it will be cheap. But doesn't make a big difference to me. Okay, so ideally you want high momentum stocks, ideally uptrend, where it breaks out for consolidation or bounce off support. Something like this. Okay, how to set target price? Good, I will answer that in a while. Okay, now at this moment, do you all understand what's the objective of bull call spread first? We work with the objective first. Do you understand the objective of bull call spread? We are basically trading it up. Okay, we are trading it up. Yes, you can use reversal. You can use the bear side, but I don't trade that. Okay, reason is because a lot of the bear trades tend to be losing. Okay, so you will see that 99% of my trades are all bull trade. I don't go short. Okay, the short trades tend to lose. Book call spread. Company fundamental doesn't really matter, but good companies has a higher probability of winning. Company's fundamental doesn't really matter. Okay. Okay, so DTE 30 to 45 days. Okay, 30 to 45 days. So here's an example. I am bullish on Goldman Sachs. Current price 384.44, target 405. So 384.44. Now look at the strike here. Which strike is closest to 384.44? Tell me your answer. Which is the strike that is closest to 384.44? 384. 385. This is the strike 385. So now I will look at the bid and the ask. I can pay the middle, I can pay the low, I can pay the high, I can bargain. So I will pay for 845. Okay, 385 right, 385 call. Everybody clear about the first leg first? 385 call, pay 845. All clear about the first leg? Yes, okay, then my target is 405. Okay, later I will explain to you how to choose the target. Okay, but let's say I am aiming for it to go to 405, and now it cost me 226. The net premium is not plus, sorry, this is a minus. Net premium is the difference between the two premium, and that is 619. Okay, 619 is your max loss. You can choose 380, you can choose 385, it's up to you. Okay, doesn't make a difference other than your premium paid. Okay, normally I'll choose the closest. Okay, because the closest is the cheapest. All right, you choose 380, you will pay a lot more premium. Okay, 380, you're paying $11. Can you see that? Okay, no, plus is wrong. It's a minus. The net premium for a bull call spread is the difference between the two strikes. Okay, different two strikes. So max loss is $619. You times 100. Okay, so break-even price will be 385 plus your 619. If it expires above this, you make money. If it expires below this, you lose. Straightforward as that. Everybody clear? If it expires below, you lose. Oh, this is what? 845, right? Correct. Okay. Okay, so okay. Okay, so let's go to the trade and see how it developed, the profile. So this is the risk profile. The long call 385 is here. This is 385. Okay, the short call 405 is here. 405. This point. Okay, if it stays in between, then it has to cross here. 391.19. If it cross to the right side, you make money. If it stays on the left, you lose money. Everybody clear about here first? All clear? Difficult to rise 5% in a month? True, it is possible, it is difficult, which is why I tell you from the start, most people who trade this will lose because you need it to move. Okay, but if you know how to do it, you can make money. Okay, what if the price drop a lot? Then you lose max loss. If it drops below 385, you lose a total of 619. If it drops below, you lose a total of 619. So should you trade during earnings? I'll explain it in a while. Okay, if it drops a lot, max loss. So cut loss, okay, cut loss for here, 50% cut loss. So if my max loss is 619, what is 50%? 619 divided by 2, 309.5. So if it reached around here and I lost 309.5, I cut loss. Okay? Yeah. In reality, the break-even will change during the trade. No, the break-even will not change. It's just that the white line will move forward. Okay, what's the likelihood of assignment? Unless the stock price really fly, then it might have early assignment. If not, won't happen. Even if it's like really fly, If the stock price really fly, even better, you get max profit. So I wouldn't be concerned about assignment. A lot of amateur traders, they are worried about assignment. Assignment is not a bad thing. Assignment basically means the buyer is giving you free money. It's good. If they assign you early, it's good. Okay? So please don't be worried about assignment. Assignment is a good thing. People assign shares, they are giving you free money. Okay? Can I? Okay, so your risk to reward for this is your max premium of max profit of 138.1, which is, okay, let me show you how to calculate 138.1. Max premium or max profit is equals to 405 minus 385 minus your premium of 6.19. Can you help me calculate what is this? 405, it should be 13.81. Agree? 13.81. Guys, can I ask, don't use cap locks. It sounds like you're shouting at me. Don't worry, I will show you the exit strategy. I don't like it. Cap locks. Not nice. I don't like it. I'm a nice person. Okay, so yes, 1381. So 1381 times 100, that will give you 1381. So that is your max profit. So max profit is the difference between two strikes minus premium. Okay, guys, don't have to worry about premium. Okay, so don't have to worry about assignment. Okay, if it's that bad, I would have already told you it's that bad. Don't have to worry about assignment. Okay, only amateurs are worried about assignment. Professionals don't care. Okay, assignment better. Okay, now up to here, everybody clear about how to do the risk calculation first? Before I even go into how to trade, you must understand the risk first. Gap up is good. Okay, if the stock gaps up, I make full profit. I love it. I love it when the stock gaps up. I hate it when the stock gaps down. Okay, no need to care about assignment. If you are concerned, don't worry. If the broker allows you to enter this trade, the brokers are more worried than you. They are scared you cannot pay them. So if the brokers are willing to let you trade, that means it's not that scary. Okay, you get what I mean? So you don't have to worry about assignment for a bull call spread at all. Don't have to. No need to worry. Okay? Can? Okay, so your max profit is 1381. Your max loss is 619. So the risk to reward will be 1381 over 619. 1 is to 2.2. Okay? So now, someone asked, can a bull call spread make money? Answer is yes, if you are trading when you are aiming for at least 60% profit and you cut your win rate is about 30%. If out of 7 trades, you can win 3 and each winning trade, you get 60% profit, you can at least break even. At least. Okay, this is how I calculate expectancy. Later, I'll give you a calculator. You can go and play with it and see how it works. But if I'm aiming for 70% of max profit at 30% win rate, I make some profit. Not a lot, I make some profit. However, if you aim for 50% profit and at 30% win rate, you will sure lose. Everybody understand how to use this table? Okay, so you want to make profit, you must have at least 30% win rate with a 60% profit. Okay, max profit. So if my max profit is $1,000, if my max profit is $1,000, I need to get at least $600 profit before I close. That's what I mean by 60%. If my max profit is $1,000, I need at least $600 profit before I go, before I exit the trade. All clear about here? So that's what I mean by max profit. So most people only have a 30% win rate. I have a 50% win rate. Okay, for me, I have a 50% win rate and I aim for 80%. So that means my expectancy is about 55 cents. This is one contract. This is one contract. So it depends on you. Can you have high win rate? You can. You can have very high win rate. Okay, but if you don't take profit or if you have high win rate, but you take profit whenever you get maybe 10% profit, end of the day, you're going to lose. So you have to find your sweet spot. For me, my sweet spot is about 50%. Every 2 trades, I win 1. And I target, each time I win 80%. No DCA, nothing. Just focus on what I'm explaining. Okay. Some of you are thinking of something else, which is not what book call spread is about. Okay. No DCA, nothing. Basically, it's just pure 1 long call, 1 short call. That's it. Okay. So what is win rate? That means every 10 trades, win, loss. If I have 3 wins, 7 loss, that means your win rate is 30%. Clear about here? That's the win rate. Pauline, can? Okay. Okay, so let me show you a very interesting tool, which hopefully some of you have downloaded. This is a tool I created just to help me to understand it much better. Okay, for a book call spread, let's say every dollar I win, okay, sorry, every dollar I lose, I aim to win $1.50. Okay, so let me focus on this. For every dollar I lose, I aim to win 150. Everybody clear about here first. Okay? If you don't have the file, it's okay. Later we will send again. Okay, if you don't have the file, later I will send again. Okay, just watch the screen now, guys. Watch the screen. Now, look at column B and C. Okay, column B and C. For every dollar I lose, I aim to make that 150. Everybody clear about my expectation first. Are you clear about this expectation? Every dollar I lose, I aim to make back 150. Yes? Okay, good. Now, then I assume that my win rate is 100%. So there's 0 loss. And there will be 10 win. Everybody understand this 0 loss and 10 win first? Clear? 0 loss, 10 win. Understand how it works? Okay? So if I choose 90%, then it will be 1 loss, 9 win. Okay? So that's how you do this one. Next, max loss. So how it works is this. Max loss is the amount I aim to cut loss. So I cut loss at 50% of the 1. Now, what is 50% of 1? Please tell me your answer in the chat. What is 50% of 1? So for every dollar I aim to lose, I cut at 50. So it is 0.5. Can you see that? 0.5? Understand this 0.5? Okay. Now, then I aim 80% profit. Now, my target is 1.5. What is 80% of 1.5? What is 80% of 1.5? 1.2, correct. Okay. Then 1.2, 80% of 1.5 is 1.2. 1.2 times 9 is what? What is 1.2 times 9? 10.8. Understand the 10.8? So if I have a 90% win rate, okay, then I expect to win 10.8. So net, the loss is 0.5, the win is 10.8. What's the net? 10.3. Okay, so as long as your expectancy is above 0, positive, in the long term, we should be expecting to make money. Excluding commission. As long as this net expectancy is positive, it's a good sign. Okay, so let's play around with it. Now let's say I have $1 risk, $2 profit. My win rate is 30%. Okay, win rate 30%. Max loss 50%, max profit 80%. Expectancy is 1.3. Is this good or bad? Scenario 2. Expectancy is 1.3. Good or bad? Good. Anything above 0 is good. As long as it's positive, if you take 100 trades, you will be profitable. As long as it's positive. Get it? Okay, but what if I do this? 1 is to 1.5. Okay, and my win rate is only 30%. Win rate 30%, and I don't aim for 80% profit. I only aim for 50% profit. 50% profit. Now, look at my expectancy. Positive or negative? Negative. So, which means in the long term, will I be making money or losing money? Losing money. So how to decide my profit and loss? First thing, I always decide based on my target first. Okay, my target, my profit to loss must be at least, for me, 1:2 for me. Okay, but for a lot of people, they are aiming 1:1.5. If you go 1:1.5, 30% win rate is confirmed long-term lose money. But if I have a 40% win rate, let's see. Break even, lose commission. See that? So in order to not lose commission, I have to increase my take profit level to maybe 60%. Then I will have positive expectancy. Okay, so the trick to trading bull call spread is this: you must dare to hold it longer for profit. If you don't dare to hold it longer for profit, you will lose. Okay, either one, you hold it longer for profit and you cut loss fast, or two, you aim higher. You aim higher, you will be profitable. Okay, so before I even move on to the examples, guys, do you understand that in order to be profitable for bull call spread, other than the trade setup, your risk to reward and the target exit plan is also important? Do you understand this part first? It's not whether you enter or don't enter, but if you don't dare to hold for profit and you don't cut loss, you will sure lose. Okay, so the trick to bull call spread is, number one, when it's time to hold for profit, hold. Number two, time to cut loss, cut. And number three, you must dare to aim high. Okay, how about you cut loss at 40? Okay, you cut loss at 40, right? Can, nothing wrong. Okay, you cut loss at 40, it is profitable, but it will be hit very fast. So a lot of times the stock will come down and go up. So that's why I don't usually use 40. I use 50 as my gauge because I don't want to accidentally cut loss. Okay, it's safer, but it gets hit very fast. I find 50 reasonable. For me, I aim for 80. Okay, but if you think that 80 is a tall order, then aim for 60, 70. Okay, IV doesn't really matter here. IV only matters in the premium you pay. That's it. It doesn't matters in the eventual volatility part. Doesn't really matter. Okay, so that's the expectancy table. Now, if I want to put it here, I can put over here. It's the same. Okay, so you can do your calculation, play around with it. Okay, so if I say max loss is 60%, then these numbers will change. You can go and play around and see what's your sweet spot. Okay, so play around with this. These are quite straightforward to understand. Okay, now this one, this tab here, this is where I can put an actual amount. Okay, I can put that. So for example, if my order account is 10,000, okay, I count 10,000, I risk 1%. Max loss is still 50%. Max profit, risk reward 2. I take 10 trades. Okay, so it will help me calculate for 10 trades if I have a risk reward of 1:2 and I have a 50% win rate. What will my actual amount profit be? So you can play around with this and see the calculation. All right, so go and play around with it. Same thing for bull call spread. All you need to do is fill in. This is a tracker. Fill in all the numbers, okay, and in yellow, all the yellow columns. It will do the calculation for you. Okay, so I will be going through every single thing. Just play around. This is quite a simple tracker you can use. Okay, now let me show you the actual trade. Okay, let me show you the actual trade because that is more useful. So some of you are asking, what's the exit plan? Here's the exit plan. Cut loss when you hit 50% of max loss. That means if you are targeting, you lose 200, right? By the time you hit $100 loss, close the trade. Just cut. Okay, just cut the loss. Okay, or you take profit when it's 80% of the max profit. So here's my exit rules. Any of these exit rules has been triggered, we exit, we close the trade. Number one, you cut loss when 50% of your max loss has been reached, or you take profit when 80% of the max profit reached. You do not exit if you lose 80% to 90%, if there's still a lot of time. Now, this happens when you are so unlucky, you enter a trade and it gap down. Unfortunate. You enter a trade, it gap down, and you lose most of the premium. Under this case, I will not cut because there's only left 10% to lose. I'll hold it and pray it goes up. Okay? Or you exit when there's less than 20% profit the last 7 days. So if in the last 7 days you are not making much, exit. Because the last 7 days, the theta will work against you, you will lose more. Okay, last 7-8 days, 55% profit, I will run. Okay, Kelvin, 55%, last 7-8 days, I will just run. Unless I'm getting 70%. If not, I'll just run. Okay, because it's very easy in the last few days, right, from a profit to turn into a loss. Okay, now, if I'm making more than 70% with 3 days remaining, I will hold. Because the last few days, if I'm profitable 70-80%, the theta will work in my favor. Now 70% can easily go to 90% profit if you hold. That's why I say you must dare to hold when you're making profit. Don't be scared. Oh, 70%, what if the price drop? When your profit is high for blue call spread, 70-80%, 75%, hold. You will get more. Okay? Because the theta will work for you. Okay? If it's overextended, you want to exit, it's fine. If it's very overextended, it's fine to exit. Okay? So 30 to 45 days is my trade. 30 to 45. I don't go for more because it's expensive. I don't go for short because short DT very unpredictable. Okay? Yes, I will close in the last 7 days most of the time. Unless I'm making a lot of profit. Okay? If I'm making a lot of profit, I will wait until last day then close. Okay? For beginners, do not hold past expiration. Okay, do not hold past expiration. Because if you hold past expiration, at certain points, there will be assignment. At beginners, if you don't know how to handle assignment, then better don't allow the assignment. Just close before expiration. 3 days before, close it. Okay, take whatever profit or loss. Okay, exit earnings unless your objective is to trade earnings. All right, so let me give you the exact statistics. These are my trades, okay, that I took. Some of the more better performance, right, is like this Starbucks. Okay, my premium pay is only $1.88, but my reward is 412. Risk reward is 1 is to 2.9. See that? And the profit came out is actually quite good. Okay, the actual profit was 374 because the stock went up. Okay, and I exited with 90% of the max profit. 90% of the max profit. So people say bull call spread cannot make money. Not true. If you know what you are doing, bull call spread can make money. If you manage the risk reward, you manage your exit point. Okay, you can see over here, match this one. Max loss is 902 for 2 contracts. Max profit is 3098. Risk reward is 3.43. And I exited with 2622. Okay, 1 trade, 2622. And I exited with 84% profit. Can you see that? So for bull call spread, if you exit with profit, make sure your profit is high. But when you cut loss, see, I cut loss 54, 55%. Can you see that? Now, there is only one case I cut loss at 100. This one was because, number one, I took a bad trade. I took a trade that is not very liquid. Number two, okay, I refuse to cut loss. And the truth is, most of the time, I refuse to cut loss at 50%. It will eventually turn into 90, 100% loss. So my suggestion is for those trading bull call spreads, once you hit your 50% loss, ruthlessly cut your loss. Don't wait. The chances of you recovering is not high. Okay, so that's what you can play around with. Now here's one example. A Google trade bounced off a support. Can you see that? Here, then bounce off here. So I entered a trade here. Okay, and the trade was this. You buy a call at 380, the one closest to the current price as 138 call, 380, and you sell at 98 cents. Okay, so the net premium is 282. Net premium is 282. my order was eventually filled at 271. Now question, why do you think my order was filled at 271 and not 282? Why do you think my order was filled at 271 and not 282? Why? The premium is supposed to be 282. Why was it 271? Yes. Remember I told you I'm cheapo, I will bargain. So even though they asked for 282, I put 271 and I went to sleep. I went to sleep. I put 271, 270, 71 around there. Then I went to sleep and it got filled overnight. And a lot of times this happened. Now, you realize I never put $1 because this is a 30 to 45 days trade. You cannot put too far. It will not be filled. So I have to put closer. Okay. So, yep. That was how I traded. I put low price. I just bargain. Yeah, I just bargain only. So it's up to you. You can put 282, then it gets filled immediately, or you can put 271, 270, 75, yeah, and you bargain and see whether it gets filled. Okay, mine got filled at 271. So the strike is 138 plus 271, break even is 140.71. Okay, the sell strike is 146. That's my target price. Okay, target price is here 146. Max risk is 271, which is the premium. Max loss is 529. Risk reward is 1.95. Didn't hit 2, but 1.95, I think I am okay with it. Okay, so took this trade. It went up. It came down first. Now this one, I was lucky. It hit about 48, 49%, maybe even 50% when I was sleeping. Okay, but next day, it just went all the way up. So went beyond 146. It went beyond 146. And the trade was eventually closed in this manner. 793 is my closing trade, opening 271, net is 522. So the return on investment will be 522 divided by 271 times 100, which is 190%, one contract. Okay, now question guys, is $271 on a trade, a loss, reasonable for you to take? How many of you 271 for your account you think is reasonable? Reasonable for a trade to lose. It's fine. You won't feel too much of a pain. 271, okay, right? Okay. So and the profit I got is 522. Not bad. How long did I hold this? Less than 30 days. I think it's around 30 days. Remember, I told you my trade is usually 30 days. Worst case 45. Okay. Yes, it's still cheaper. This is a trade that I cut loss. Okay? Profit is not great, but at least I get almost 1.9 times. Okay, but if I do credit trades, I'm getting like 30%. So this is my kind of trade. I like to trade. I like to risk small, win big, and yet the loss is capped. Okay, now guys, if you have your account and you're trading this way, will you be worried about what happens in the market? Will you be worried whether Donald Trump is going to say something? Will you be worried whether the Federal Reserve is going to change interest rate? Will you be worried about all these things? You will not, because your risk is capped at 271. See that? So normally I just use 30 days trade. So that's why I like book cost spread when I started. No worries, loss is capped. Even though profit is also capped, but loss is capped. Okay? Can I don't look at delta. Marcus, book cost spread has no put, it's all cost. Now, here's another one that's super pretty, super nice for me. Uptrend, hit a resistance, came down, support. See that? First support, normally I don't enter. Second support, I didn't see this. To be honest, I didn't see this one. If I saw it, I would enter. Then go up, come down. Support, confirmation. Can you see that? Can you see the confirmation candle here? So I buy a call here. I sell a call at my target. So buy 110, sell 119. Buy 110, sell 119. 32 days contract. Okay? Held it for 11 days. Close the trade at 88%. Now, question now, guys. Is it, okay, let me rephrase. Why do you think I closed the trade after 11 days? After 11 days, it was around here already. Why do you think I closed the trade? Yes, confirmation is a green candle. Why do you think I closed the trade after 11 days? Prevent decay, not necessary. Hit target, yes, it hit my target already. It hit my target of 80%. That's why I took and run. No harm done. 80% profit is good. 88% even better. One trade. Okay, my risk was 246. My reward was 2.66 times. See that? I don't roll. No, there's no rolling for book call spread. Enter, exit. That's it. Okay. Now, would this be a very good trade that you would want to take? Would this be a very good trade? Good, right? That's what I like. I like this kind of trade. Especially stocks are like that. They like to move sideways. When it moves sideways and it bounces off the support all the time, super fun to trade these kind of trades. You don't own the shares. This is a pure option trade. Okay? No owning of shares. Then match, another one. Support, go up, come down, support, resistance, came down, support. Confirmation candle. Can you see that? Confirmation candle, enter the trade. Target is 135. Actually, my target was here. Okay, but after that, I sold this because he profit again. Can you see that? So you realize I will not go for 100% unless I'm very confident there is a certain level to go. If not, 80% profit is reasonable. It's not the best, but I think it's fantastic. Okay, so 80% profit is my target. Normally, my target is usually at the resistance or at one standard deviation. Okay, so when you come for the Wave Rider mentorship program, right, the rules are there. It's all written in the course. Okay, if it goes above, even better. If it goes above the short strike, you get more money, more profit. So I want it to go above the short strike. The higher it goes, the better it is. Okay, let me show you one more. This is Nike. Now Nike, right? Somebody asked, can I take it on earnings? I took on earnings. Support over here, support, support. So over here, it came down to support just before earnings. Now to me, right, if it comes down to support just before earnings, I can take it as a normal trade, as if there's no earnings, as if there's no more earnings. Okay, why? Because if there's no earnings, this is a valid trade. And earnings will so-called invalidate it. But right, I have to exit. But the thing is this, for a bull call spread, is the loss limited? What do you think, guys? For a bull call spread, is the loss limited? Yes. So am I worried about earnings? I'm not. Even if it gaps down, I don't really care. If it gaps down, my loss is capped. I am not worried about it. See that? So, but the thing is, it's advantageous to me because it's at support. And my target was at 145. Earnings result came out, it gapped up here. Okay, it gapped up here. Now, question, guys. My target is 145. It gapped up here after earnings, which is good. Should I exit or should I hold? What do you think? It gapped up. This was a very, very nice trade. It gapped up. Should I exit or should I hold? Well, I look at my percentage profit. If my percentage profit is above 80, I exit. And it was above 80. It was above 80. So took the profit, exited with a $952 profit. ROI 2.41. I get 2.41 out of 2.8. Risk reward 2.8. So does it mean that if you aim low, does it mean that if you aim high, you won't win? No. It's all about finding the right trade, knowing how to trade it. And once you know how to trade it, then it's fine. Okay. Good question, David. What if it doesn't hit 80% and the price drop? If it doesn't hit and price drop, so be it. It's part of the trade. You cannot win every single time. If it doesn't hit 80% and drop, which was what happened to the Starbucks trade, it's fine. I'll still hold until it hits 80%. If it doesn't hit, then I'll follow my rules of exit. Whichever comes first, exit. No assignment here. There was no assignment here. Okay. So the R multiple is basically the max loss versus max profit. 1105 divided by 395. That's the R multiple. Okay. Yes, you can use resistance to set your target, the 145. Up to you. Okay, you can use resistance. For specific points on how to set is in the Wave Rider membership. Okay. Like this one. This one was a very nice one. This one was interesting. Support, enter here. So when I entered here, now the fun part of this trade was it went up. Then when it was here, when it was this candle, right? When it was this candle, I had about 80% profit. Okay, at this candle, 80% profit, and I was greedy. I decided to put in a closing order, and if it gets filled, I should get about 81, 82%. Okay, that was what happened to this trade. At this point, okay, my P&L was about 80. I put in an order, if it gets filled, it's 81 to 82%. Did not get filled. It did not get filled at all. So it did not get filled and it came down. Now, question, at this point, right, how many of you will close the trade? Let's be honest, if you are me, it went up, it came down, long red candles. How many of you will close the trade? You will close the trade, right? Now, question, has it hit 50% loss? It hasn't. Has it hit 80% profit? It hasn't. Is it in the last few days of trade? It isn't. So is there any reason to cut loss? No, there's no reason to cut. So I held on to the trade. Okay, remember I told you when you're making profit, time decay works in your favor. I held on to the trade, eventually close it here, 91%. See that? This is what I mean by you must dare to hold. If it doesn't hit your exit rules, don't exit. If it hits your exit rules, exit. Okay, this is a very good example because I held, I got more. Okay, 1,005 profit from a max loss of 744. Okay, and that is because I took 4 contracts. One contract is only $186. How many of you here okay to take a trade max loss 186? You're okay with that? How many of you? 186 is fine. Just maybe eat one lesser dinner at a restaurant. See that? Okay. Now question. How many of you find that bull call spread is a very safe strategy compared to bullish synthetic? And you think bull call spread is more suitable for you? How many of you think bull call spread is more suitable? Lesser risk, more stable. At the same time, the loss is capped, profit is capped. Okay, and this is what I like. I like capped profit. When my account was small, right, I don't like to take big risks. This is what I do. Okay, but when my account grow bigger, I started to do bullish synthetic. So you will see that options, right, can fit different kind of profiles. Okay, and it's simple to execute. It's very simple. Okay, okay, so you will see that many of my students, they use bull call spread and they can be profitable. Eileen was one of those I coached. Okay, she took a trade and she was very happy because previously she kept losing on bull call spread. Okay, after that she realized with the right strategy, why not? Okay, yes, different people like different strategies. Some bull call spread, some bull spread, some bullish synthetic. Tommy traded all. Tommy traded everything. See that? Okay, so you will see that bull call spread is very suitable for new traders, for traders with limited capital. Even those with bigger capital can trade bull call spread. It's just that it's simpler to manage. Problem is if you don't enter at support, that's been tested many times, you rush into a trade, the winning rate is low. So you must wait until very nice, then you enter. So in the course, in the membership, we will teach you how to do that. Right? Yes, it's definitely better. Okay, you see there's Sharon, another one. Okay, doing very well for bull call spread. Profitable in your trades. Bull call spread don't really need fundamentally good company. Main thing is the technical must be right. Bull call spread, technical is more important. Short strike is your target price. Resistance could be one standard deviation could be one. All right. Okay, so you'll see that many of our members, right, what they do is they trade the multiple strategies in the options Wave Rider membership. Yes, it's a lot easier to learn with options and making money. See that? Like Suren uses different kind of strategies, cash or put, okay, and he got a premium of $6,711 just in March 2023 alone. Yeah. Okay, and you can see there's so many. Okay, so guys, how many of you tonight, right, you have learned a lot and you think you can start applying the strategies in your trading already? Yeah. Okay. So you'll see it's definitely options is the way to go if you want to grow your account, as long as you understand the risk. Okay, for me, I will always say this: know what you are investing in, know what your trading is, learn the skill first. Okay, because when you learn the skill, then you can make it into something that you excel in. Okay, every time you learn something, you always think about those people who have done it before. How they do it? Can I be one of them? How many of you have that kind of thoughts? That when you are looking at options the last few days, you are thinking, can I be like Adam? Can I be like Bang? Can I be like Warai? Answer is yes. The big difference is we started earlier. We started 10 years ago, 20 years ago. You start now. Okay? And when you start now, you pick the skills from us and you cut short your learning journey. Okay? So main thing for all aspiring option traders is this: start now. When you start now and you join the membership, the Wave Rider membership, the mentors, the seniors here will guide you. Okay. Now, how many of you here, you experience this? You are trading and you are losing and you start to go, can I make back this money? How many of you have this experience? You lost, and the worst thing is this: you cannot even tell anybody. You tell your wife scold you and say, you are a gambler. How many of you are like that? Me, my wife used to call me a gambler. Yes. I don't dare to tell her. When I busted my account, I don't dare to tell her. Okay, but when I busted my last account, I was so upset. I cried in front of her. I bought, okay, and that's when true love happens. She told me this: pick yourself up from where you fell. You lost the money, it's fine. But if you don't pick yourself up from here, right, you will not ever get far in the future. Okay? Then she said, do it again. Who knows? You can make it work. Now, she passing her money, I trade for her. And that is true. Okay? When you are doing it alone, it's very, very hard because people don't understand what you're doing. However, when you are in a community where you have mentors guiding you, that is the big difference. Where you have mentors who have been there, done that, and they tell you what are the things that are useful, what are the risks. Okay? So very, very important. Many members made money. You can see David, okay, Michael, they are not worried about market falling. Even sleeping, when I trade blue prospect, I don't really care. Trade it, go and sleep. All right. So many examples over here. So I'm going to introduce, and this is the last time. Okay, I'm going to introduce the Option Wave Rider membership program. Okay, Option Wave Rider membership program, which Adam and Bang has shared already. So tonight is the last chance you can get the membership at the discounted promotion. Okay, because this is the last webinar. So for those members who are looking at taking control of your own financial freedom, this is what we can offer to you. Okay, the Iron Shell level 1 and 2, where you gain profits from various markets, all direction, be it the bull or the bear, and you learn at your own pace. Okay, so level 1, you have your option basics, option strategies for investors, okay, aggressive bullish and bearish trading strategies, the bull call spread and bear pull spread. You have your moderately bullish and bearish trading strategies, bull pull spread, bear call spread. All the tools required for you to get started, okay? And there's bonus, how to hedge your current position. Then you also have level 2, which is what most of the mentors are using. You have your moderately bullish strategies like Jade Lizard, Bull Bang Collar, which is another version of bullish synthetic. Crouching Bull, another version of bull call spread. You have level 2, which is market neutral strategies like Iron Condor, Snipex. Then you have the aggressive bullish synthetic long and short. Bull Bang. Bull Bang is another version of bullish synthetic. In fact, it's the safer version. Okay, Bull Bang is the safer version of the bullish synthetic. Okay, and you can also trade earnings using earnings probability spread and earnings sniper spread. So Adam will also train you and mentor you on trading psychology and risk management. Options trade management technique, part 6, how to roll options, brokerages, how to set up your chart. This is done by me. Okay, I have done the videos. You can watch it. and the bonus strategies like back ratio and collar. Okay, so those of you who wants to take on the promotion, this is your last chance. And if this is your fear, that you are afraid, don't worry, we have to start somewhere. And the earlier you start, the better it is. It doesn't matter how big or how small your account is. I started with a small account. I made it bigger. I had my failures along the way. I made mistakes along the way, but the mentors and the community supported me. Okay, option is just like any other subject that you have learned before in school. Starting part requires a bit more practice. At the end of the day, you practice, you master it. Okay, so learner-wise, remember Adam shared about this gentleman, which is 80 years old? Well, I've coached him personally. He's one of my students that I coach personally. He's 80, and now I think he's 82 already. If he can do it at 82, why not you? In fact, he's one of my best students. Always asking questions, always testing out, not worried to be making mistake. To him, make mistake is fine. Just have to make sure that you don't make the same mistake. Okay, so what's there to afraid of? Community is there, the support is there. Now, anybody here, you did what I used to do. Go to websites, go to forums, read what people say, and you don't even know those people. You've never seen those people before, and you follow their trade and lost a lot of money. How many of you have done that before? Read forums, Reddit, and you follow people, and you don't even know these people, and you still lose money. Now, our community, you get real people trading. All the trainers, all the mentors are there. Okay, we do our best to stay awake as long as possible. Okay, but we need to stay back. Okay, but we are generally quite prompt in the community. Okay, and if you make a wrong mistake, a wrong trade, it's fine, as we are there to support you. Okay, so what you need is a system that can guide you, and as long as you start and there's a good system, all of you will be able to take control of your own financial trades and financial freedom. Okay, so here's what we offer. You enjoy 1 full year of online mentorship from Adam, Bang, and coaches, including me. Okay, so it's designed to help you to start with full confidence. Many of our members, right, started off as newbies. I started off as newbie. Okay, but as time goes by, we become better, and we started to use all the option strategies in different ways. All right. So what's in it? Number one, you have your onboarding workshops for beginners. I will be conducting onboarding workshops to help you to get started. Okay, so we have another coach called Sigit. He will also be helping you, and this is conducted once every 2 months. Okay, we'll teach you how to place your trades, how to set up your account, how to use the tools. All right, and the most recent one that I conducted, there are students who ask me how to handle the market condition, especially when the Great Liberation fall. So we also manage that during the webinar. Okay, so that's done once every 2 months. Then you also have the staple strategies, okay, which is conducted by either Bang, me, or one of the coach. Okay, so this is a revision strategies on the basic strategies. And Bang will also conduct webinars on the advanced strategies with live case studies. Okay, so like what I've just did just now, we do live case studies. We don't plug off the information in theory. Every trade that is shown to you is traded by the mentor and me. Every trade. We don't give you theory. We put our money where we say it is. We put our money where our mouth is. Okay, and that's the kind of mentor that you're going to get. You're not going to get someone who says, do this trade, but they don't do. That's not us. We show you our account. We show you whether is it profitable or not profitable. All right. So these two modules cost 1,797 and 2,697 respectively. Okay. Then you also get this online monthly e-gathering with Bang, and he will do live trade hunt. This is done monthly. Okay. It's done online. Bang will run through the trade process. Okay. Now, theories you can get online. It's the thought process of Bang that will mean a lot to everyone, because we want to know how he made decision. How come he rolls a certain trade? How come he doesn't roll it? How come it takes a certain rate? The thought process is what makes great traders even better. Okay, and this is done on a monthly basis. Cost you 3,597. So in total, you also get this thing called the options discussion group. Okay, the trainers, the mentors, me, fellow traders, we are all here. Okay, so if you have questions, you can always post the questions. If there is anything we need to update you, the fastest way is to update here. Okay, we don't usually update you through email because that's too slow. We update you through Discord, so you can get your trades checked, discussed in Discord. Okay, and this is worth $1,197. And important, trading is 90% psychology. Adam will personally conduct this quarterly trading psychology class with you, okay, to help you to navigate the challenges, the ups and the downs. Okay, whether the market is good or not, we are here. We have been here for the last 10 years or more. Okay, we will still be here. We will show you how to navigate the bullish market, the bearish market, and even the boring markets, the one that's moving sideways. Okay, so Adam will be there to share with you trading psychology strategies that you can manage, okay, so that this journey is something that helps you to build your account. This is worth 1,001. In fact, I think this is worth a lot more. Okay, why? Because to get Adam to even speak to a group of people, easily $10,000. Okay, but we just put 1,001. We should put more. Okay, how many of you agree with me that just for Adam to share with trading psychology is worth a lot more already? Yes, Adam, he is the master of trading psychology. Okay, and he's doing it. Okay, and this is done on a quarterly basis. Okay, so you will see that there's many traders here who have great results, like Mike, 37% return year to date. You have Wendy, 2023, I've shown you before, 59% purely based on options. Okay. Suren, I've shown you this before, and I'm not going to go through everything because we have shown you this many times. Bang, I've shown it to you. Adam has shown it to you. I've shown it to you. Okay. Gumi, yes, Gumi, this one I must share. Gumi is another student I've coached personally. When Gumi started, right, he is someone that has his own way of thinking and he's losing money non-stop. Eventually, we managed to help him to come up with his trading plan, craft a trading plan that he follows his rules, entry rules, exit rules. Eventually, Gumi started to do well and became very profitable. Okay, he's one of my students which I personally felt has 180% change in mindset. He used to be very negative. He used to think that speculation is the only way, until he realized all he needs is a strategy and a system. At the moment he has that, he was very profitable. Okay, so you see Cat, you see many of them. Tommy, many of them very profitable. So here's what we offer. You have your Iron Shout, Iron Striker course. This is lifetime. So as part of this Wave Rider membership, you get your courses lifetime, which includes 26 powerful option strategies, case studies, quick reference guides, and email support from coaches. You also have online membership or online mentorship, 1 year access. Okay, online mentorship. So in this 1 year, you can attend all our webinars. You have all the support. Okay, it's online. So this is a 1 year access that we do monthly gathering and live trade with Bang. You do the monthly strategy deep dive webinar, option trader discussion group, the Discord group, quarterly psychology class with Adam, and online onboarding workshop for beginners. Okay, I can tell you this is definitely one of the most comprehensive programs. You don't come for just the course. You come for the course, you join the mentorship, you get your community, and you have the mentors guiding you every single day to bring you to success. And that's what this mentorship is about. It's never a fly by day, fly by night kind of program. It's there the whole year with you. In fact, many of our students have been here for the last 6-7 years. Okay, and they are still around. Okay, so the retail price is $2,997. As part of Retail Rebellion, we give you another 2 months of access. So total 14 months of online membership. Okay, or online mentorship. 14 months. So only during Retail Rebellion, last chance to get 14 months. After that, don't come and ask us for 14 months. No more 14 months. We'll go back to 12 months. Okay, so only retail value. So here's the upcoming mentorship programs. Okay, the dates, if you're interested, you can look at it. Okay, so I'll leave it here in a while. And for those of you ready to enroll, scan the QR code now. Trust me, it's definitely worth it. We are giving you a 40% off. Currently, it's only 1798. Okay, 1798. Some of our students, right, literally, they just earn it back within a few trades. Okay, you can see some of my trades, right, easily 1-2 trades earned back already. Okay, so all you need to do is take action now, get started, and the mentors and the coaches will guide you towards your financial success. Okay, so very, very important, start now. Start now so that you can take control. The earlier you start, the faster you get control of your financial freedom. Okay, yes, like what Heng said, agree, start now. Okay, so this is your last chance. This is the last webinar for options. Okay, this is the last webinar for options. Scan the QR code, subscribe to the mentorship. You get access to the mentorship videos immediately. Okay, you get access to the mentorship videos immediately. Yeah. Okay, so yes, this is the current best promotion. All right. For renewal, you have to chat with our team. Okay, so for renewals, you have to email in. So for the mentorship this year, we are offering 179. Very good deal. You got Bang, you got Adam, you got me, and the coaches to support you. Okay. Well, is it too much too soon? I will say this: it's never too early. In fact, I always tell my students, if you know what you can do 10 years ago to control your financial freedom, will you wait 10 years later? If you know what you can do the way I did it, I show you the examples to earn a profit. If you know what you can do, like the other students who make their profit 10 years ago, will you wait until 10 years later? You will not. That's why if you start now, you don't have to wait another 10 years. What's more important is start now, pick up the skill, and when you are ready, you will apply the skill. Okay, you don't wait until you are ready, then you can pick it up. That's too late. Okay, when you are ready, then you pick up. Market has already moved. You are late. You are late to the game. Okay, so many students, they ask me, why are you able to get the shares at certain price, trade at certain price when I cannot? The price has very gone up. I put it simple, because I started early. I started 5 years ago. I started 6 years ago. Okay, you start now, then you, of course, you will be later than me, but you will be faster than those that's going to start in the future. Make sense? Okay, so scan the QR code now is very, very good deal. One of the best deals I've ever seen. You can go out there and see. No other programs will ever show you their live accounts. Okay, no other. Bang has shown you his account. I've shown you my account. Adam has shown you his account. No other programs will dare to do it. We dare to do it because we trade just like everyone. Okay. By the way, you see the account that I showed you? Okay. That account, other than that one small account that I'm trading for the company that I showed you, the rest of the accounts are my personal account that I built from the start. I built with 20,000. Now it's 200,000 over a period of 6 to 7 years. Okay. So, and the one that really got me growing my account fast was options. Okay. And it's dummy proven. I'll just tell you, it's dummy proven. If you don't do stupid things, you just follow what the mentors guide you, you will be safe. It just takes practice. It just takes practice. That's all you need. Okay. But if you don't do crazy stuff, then that's not our problem. But if you follow what we share with you, it's a very good skill to pick up. Furthermore, let's think about it. When I took my university degree, it was almost 40K, 40,000. Did I manage to apply any of it? No. I'll be honest, I never applied it. I was an art student. I studied history. Yeah, I studied history. Spent 3 years studying history in NUS. Good school, top 20 in the world. Okay, but did I manage to apply any of it? No. End up, I'm do trading. Okay, and this is only 1,007. compared to 30,000 I pay for my university education. It's damn cheap. It's damn worth it. Okay, so take this opportunity, go and look at it. Okay, go and enroll in our mentorship program now. Scan it now. Okay, now let's take a 3 minutes break. I know some of you have questions for me in the Q&A. So the coaches have already collated for me. I will look through it and I'll answer these questions. Okay, so just take 3 minutes. Let's take a look at the questions. Okay, let's see. Okay, let me answer some questions first. Okay, sorry guys, can I share my screen? I think someone is sharing. Can I share my screen? Okay, now while I share this screen and you are enrolling the mentorship now, let me answer some questions that your friends ask. K asks, okay, K asks, with my account size, am I able to live on this account size without work just by trading and investing? Okay, to be honest with you, this year is a very good year. This year, I'm making about, these 12 months, I'm making about 10K a month. Okay, 10K a month. So question guys, with 10K a month, how many of you think that actually can survive? Right? Don't need to worry. 10K a month. How many of you feel that it is reasonable? Can survive? 10K a month. Can right? For me, 10K a month is more than sufficient to survive. Okay, but of course, for some of you, your expenses like 100K, that is a different story. Yeah. But for me, 10K, I think is reasonable. And that is excluding my salary, okay, or my wages. Okay. Now I know some Adam likes to say, learn trading so that you can fire your boss, right? Well, I see it differently. I love my job. I love my job of going and guiding people. I love my job of doing research. So I don't need to fire Adam Khoo. Yeah, I'm a nice man. I love him. Okay, so I am doing trading and I'm making money from my day job. Morning in the day, I work. At night, after my daughter go and sleep, I trade. Not bad. And after I trade, I go and sleep, I wake up. Yes, profit. Well, it's quite a good lifestyle. Okay, so if you ask me 10K, yes, it's sufficient for me to not trade, not work anymore. It is sufficient for me. Okay, maybe for other people may not be, but my account size, yes, 10K is sufficient. Okay, so let me see, what other questions do we have? Okay, let's see. Okay, what went wrong with me when I busted my account, right? Answer is this. I didn't follow my exit rules. Remember I told you about the exit rules for book or spread? So I had exit rules when I was trading Forex and options. But because I was losing, I decided to remove the stop loss. And it kept going down. It went down, I buy more. It went down, I buy more. It went down, I buy more. End up, whole account busted. Okay, now, that happened all in one night. So that night, what happened was, I had too much coffee. I had nothing better to do. I was single, too much free time. So I decided to click. And the more I click, the more I lose. Okay, so it was very bad. And eventually, I broke down. And broke down and started to double down, all this kind of stuff. So, and the reason why it happened was because at that time, I didn't have anybody guiding me. Okay, I followed the forums, followed people that I don't know, and I just traded that way. So that was one big lesson I learned. No guidance, speculations, do not accept that losses can happen, do not cut loss. So that's why I always say, if you need to cut loss, cut loss. Once you cut loss, you can move on to the next trade. All right. Okay, good question. The first 2 years when I did belly, was it prior to Adam's course? Actually, it was after Adam's course. You know, sometimes you learn something, but you don't want to follow instructions. You don't want to follow what you learn. And that was what I mean. That was happened to me. I got complacent. The first 6 months was very profitable. Then eventually I decided to put in more, broke all the rules. That's why the first 2 years started to add in shares, it keep going down. So yeah, I use a lot of margin, very bad experience. So that's why after that I told Adam, and Adam told me the best way is to really pick myself up, don't make the same mistake. Okay, so it wasn't because of the strategy, it was because I wasn't ready, I wasn't mature enough, okay, to follow the rules. That was the reason why that time I lost. Okay, it was because I wasn't enough to follow the rules. Okay, let's see what are questions. Okay, what Guai Tak, you are taking the PM course, you are feeling stressed to follow online, but you are doing it every day. That's good. Okay, Guai Tak, you are doing it every day. Yes, you can book the Rave Rider mentorship first. Okay, you can buy the course first. You can buy the membership first. Okay, but I don't think this offer is going to be there for too long. Okay, so the price is only for now. Okay, the price is only for now. Okay, for bull call spread during the March-April period, I didn't trade a lot. Junpeng, I didn't trade a lot of bull call spread in the March period because remember I told you nowadays I focus more on bullish synthetic. That's the reason why I didn't take a lot of bull call spread. Okay, because once my account started building up, right, I can grow it faster using bullish synthetic. That's for me. Okay, but definitely bull call spread in March, April, probably you will get about 30-40% win rate. The most, because that period was quite volatile. Okay, so 30% to 40%. That's my guess. Okay, but now I trade a lot more bullish synthetic. All right, because for me is I want to grow my account exponentially. I've already passed the stage of building my small account. Now, yes, it's a mid-sized account. Okay, I want to grow it exponentially. I have to use higher risk strategies. I have to use higher reward strategies. Okay, which is what options is good. It's good for people of different skill levels, different knowledge, different risk appetite. All right. Okay, let's see what else. Good question. Sherwin is asking, when you enroll in the mentorship and you learn the strategy, unsure of how to execute, can you ask in the community chat? Will that be answered? Sherwin, okay, this is my guarantee to you. When you ask a question about how to trade your strategies in the community chat, it will 100% be answered. That's my guarantee to you. Either one, a coach will answer. Two, if nobody answer you, tag me, I answer. Okay. Three, Bang will answer. If not, another community member will answer. Okay. The only request we have from you is this: watch the course videos first. Don't understand, then you ask. Okay. If the thing that we don't like in our community is people who don't watch the resources, don't watch the course video, then they go and ask. Then it's quite a bit of waste time. But if you watch the videos, I guarantee we will answer. Okay, so this is my personal guarantee to you. All questions regarding the course, as long as it is related to the course, we will answer. Okay, but if you ask us something about other people's strategy, I can't answer. We can only answer about our strategy. Okay, can I? Okay, so take this last few minutes. Okay, scan the QR code, enroll for the mentorship now. Okay, good question. Somebody just asked, you are using IBKR. Can that work in Wave Rider? Answer, yes. Those using IBKR, okay, you may realize that Bang uses a lot of Think or Swim as the broker. And some of the examples are using Think or Swim. Now, IBKR can at least, I wouldn't say it's 100%, at least trade 90% of the strategies in the mentorship. 90%. Okay, maybe some strategies is specific to Think or Swim. Okay, but 90% of strategies in the course can be traded in IBKR. Okay, we have videos in the mentorship that helps you to pick up IBKR. And if you have questions, just ask in the Discord community. We will answer you. Okay, other brokerages, it depends. Some brokerages may not be that suitable. Okay, So for options, it is preferred that you use a broker that has a strong option platform. Okay, some of the brokers like Mumu, Weibo, they may not have a strong options platform. Okay, so just take note of that. Those trading options, you will require a slightly stronger option platform. The basic ones a bit difficult. Okay, let's see. Any other questions? Okay, while you sign up for the mentorship, any other questions? Let me look through. Which is better, TOS or IBKR? If you talk about options, right, TOS is easier to use. It's nicer. But TOS, the problem is they only accept accredited investors. Okay, so if you're not an accredited investor, you cannot use TOS. Then IB is a next option. Okay, I use IB. I find that IB is not the best options platform, but it is usable. As long as you practice, it's usable. Okay, Tasty Trade. Okay, Tasty Trade depends on your country. Tasty Trade is not regulated in Singapore, so I cannot suggest using Tasty Trade to Singaporeans. Okay, those in US, Tasty Trade can be an alternative to TOS because they are very similar. It's the nicer version of TOS. Okay, so but you have to check your regulations, your insurance, all this kind of stuff with Tasty Trade. I've used Tasty Trade before. I like it. Okay, but now I'm not using it because the transfer fees is quite high between Singapore and US. FSM1, Mumu, Tiger, they don't really have very strong option software. So those are not the ones that I will use. Okay, so you have to check their it's the software that's important. Okay, for Singapore brokers, you have to ask them whether do they have a strong options platform or they can only use basic. If it's basic, then it's not suitable. Okay, yes, IBK actually permits, I won't say 100% because there are some strategies that bank uses that requires a different way of calculating, which IBKR don't use it. Okay, but generally 90% of the strategies in IBKR is okay. Yep. Okay. Weibo, Mumu, they don't have very good options platform. All right. Which platform most suitable? I cannot legally tell you which platform to use. I can only say that Adam, Bang, me, we have been using Think or Swim. Now I'm not using Think or Swim anymore. I'm using IBKR. I have used Tasty Trade. These are the ones that we've been using. Okay. Adam is also using IB. Bang occasionally uses IB. Okay. Some brokers, they use IB's platform. I think they have some agreement, they use IB's platform. So if those brokers are using IB platform, then it's fine. But if they don't have a good options platform, that means they cannot trade three-legged, four-legged strategies, right? Then those are not the ones that we want. Okay, your brokers must allow you to trade those 3-4-legged strategies. Okay. Robinhood never used before. Yeah, Robinhood I never used before. Option mastery, it's and option rate finder is the same. Option mastery, no, it's not the same. No, it's the same. Okay, the mastery is the level 1, level 2. Okay, the option mastery is the level 1, level 2 course. Mentorship includes all the webinars that Bang is doing, I'm doing, Adam is doing. Okay, so now there is the mentorship together. Okay, now I will always suggest take the mentorship because it is the community and the mentorship that will help you. Okay, online, the videos that you can read, but it's the mentorship, the community that makes a difference. Okay, please don't use mobile to trade options unless you're doing one-legged option. All options ideally should be traded on your computer platform. Don't use website. Okay, use computer platform, download it on your computer. That's the best. Okay, so website also not stable. Okay, I will not use the website. I will just use the platform. Simple as that. Okay, I'll use the platform. I have used Think or Swim before. I've used IB. I'm using IB. I've used Tasty Trade. Bang is using IB and Think or Swim. Adam is using IB and Think or Swim. Okay, there's a lot of other platforms you can consider. Okay, but please do your due diligence to check whether they are suitable and are they regulated in your country. Okay, okay, so last few minutes. Okay, last few minutes. Scan your QR code. All right, so you can see the second year renewal is only at 899. So for those of you asking, what's the renewal rate? Second year renewal is 899 only for now. If you sign up next year, price different. Okay, inflation will come in, confirm. Yeah. So secure your 2-month access and you receive the instant login. So the moment you sign up, you make your payment, you get an instant login to your account. All right. So remember, guys, all it takes is a few trades to make back your mentorship fees. You see all the testimonials, all the comments by our students. Most of them make back quite quickly. Okay. All you need is that. Once you make a few trades, right, it's quite easy to make back the cost fee. In fact, many of them make it back quite fast. Like Asanka, 28% in the last 7 weeks. Recover all the cost fees many times. Okay. Make the right choice now. The power to grow the wealth is in your hands. This is what I've been saying throughout the whole webinar. Would you rather take control of your own trades, of your own profits, or would you rather allowing someone else to do it for you and you pay them for it, yet they give you minimal returns? What would you prefer to do? I prefer to take control myself. Okay, you have to decide what's your preference. Okay, I prefer to keep 99% of my profits. I don't want to keep only 5% of my profit. That's not what I want. Okay, so yep, you'll see Toby, same case. PayPal up 120%, make back everything again. See that? Kong beat the market for the first time ever using DS and Bubang collar. Okay, DS is the one that Bang shared the other day. Okay, you have Xian Xiong, 324% profit. Okay, and basically they make back every single cent. Okay, but of course, these are students, right, who are willing. Okay, they are willing to get started. They are willing to ask. They are willing to take the trades. It's okay to make losses. Okay, but once you make your loss, you make your change, you can always earn back your cost and subscription fees over again. Okay. Okay, and there are many of these. Cheryl. Yeah, I know Cheryl personally. It took her a couple of years, but end up she still made back everything. Okay, so many examples. Barry, okay, Barry, 400K in close profit. Of course, 400K is because his account is relatively big too. Okay, so I have to be very honest with you. Big accounts earn more in absolute. Small accounts earn lesser in absolute, but still profit, still profitable. Okay. Suren, another one. Very nice. Okay, so last call, last offer. Scan the QR code now, get your 40% off, get your instant login. Okay, get your instant login, and your second year renewal is only at 899. Okay, it's only for now, only for now. Okay, so only those of you who join the mentorship now, your second year renewal is fixed at 899. Okay, you join after the event, no such thing as 899. All right, so this is a limited time offer and the event retail rebalance is ending soon. Today is the last options webinar. Okay, so Adam, Bang, they are not going to do options webinar anymore. So today is the last one already. So grab your opportunity, okay, to sign up, to join the mentorship and join us in this journey. Do I trade options using IBKR web portal? No. Yeah, I don't trade using web portal. I use the platform. For the mobile app, I only use it for the very basic options, which I already memorized the risk profile. Okay, but the advanced options, I don't use mobile. Okay, okay, good. If you have a question, Frank, yes, you can email in, or you just type your question. Our staff will talk to you. Okay, Frank Spencer, just type your question. Our staff is looking at the chat. They will assist you. Okay, so this discount package, right, whatever I can offer is tonight. Okay, now. So I will say, grab it now. Okay, grab it now. That's all I can say. The earlier you grab it, the safer it is. Okay? Yes. Okay, one standard deviation is a number the platform calculates. Okay, so when you join the course, right, on the mentorship, we will explain in the mentorship where is the one standard deviation for IBKR and for TOC. Okay, the BSS tracker, don't worry, a month. If you don't have, right, just drop us an email. Our team will send it to you. Okay, all the BCS tracker that I showed just now, right? You have access to it. Is an attendee bonus. So as long as you attend, we will give it to you. Okay? Yes, USD 899 for second year. No trial. No trial. I think Adam, Bang is good enough. No trial. Sorry. Right. Ego. I'm good. That's me. Maria, that's me. No trial. We are good. Sorry, that's true. Okay, so yes, sorry, there's no trial. Okay, so grab your mentorship now. Some of the questions are very, very cute. Any more questions? Any more? No more? Okay. Okay, so like I mentioned, so many examples here. Okay, so all these testimonials you've seen many times, I'm not going to show it to you. So the main thing is this: grab your opportunity now, okay, and get started. Grab your opportunity now, get started. Okay, see so many testimonials. It's too many to even go through. Okay, it's too many to even go through. No, live trading, we don't do live trading daily. Okay, we don't do it, but Bang will do his trade analysis on a monthly basis. So when you attend, right, he will do live trades during the trade analysis. So in the mentorship, right, you can post your trades. Sometimes Bang will post his trades. Okay, there will be discussion. But if you talk about live trades, right, it's done during the mentorship webinar by Bang. Okay, mentorship webinar by Bang. Eric, you don't have to worry about options platform because once you join the mentorship, the first webinar you're going to attend will be, okay, if you follow the dates, right, the first one will be Bang's webinar, but after that, the next webinar will be mine, Jumpstart. That is when I will explain about brokerages, what kind of brokerages to open, what kind of brokerages not to open. Okay, so when I explain that, right, you will know how to choose a brokerage for platform. Okay, so Eric, don't have to worry about the brokerage platform. I will go through that during one of the webinars, the Jumpstart webinar. Okay, can I? Okay, so many. Wow, really too many here. So take this opportunity now, sign up for a mentorship and get started. That's all I will say. Get started. Okay, see, so many of them. See, I click until my finger also tired. Yeah, I'm on the last slide. So guys, how many of you learn a lot in this session? How many of you learn a lot? Power, right? So I saw one of you that really made my day. Your comment made my day. Best webinar in the whole series. Yes, I like. Okay, now please stay tuned for the next webinar by Adam. Another very, very powerful webinar. Okay, let me show you where is it at. Somehow the slide went missing. First, Adam's slide. Let me see. Just give me a second to find the correct slide. My slide went missing. This one. Okay, so those of you who are still registering for your mentorship, right? Continue registering. At the same time, Adam is doing his upcoming income boosting roadmap webinar. Basically, okay, not this. Okay, basically, next coming Saturday, is it Saturday? Let me just check. Coming Saturday, correct? Coming Saturday, Adam is doing his income investing webinar. Okay, That's another very, very powerful webinar. And in fact, it's the new program, his newest program. It took him quite a while to come up with the program. Okay, it's suitable for people who are looking into dividend income investing. Okay, so on Saturday morning, remember to join Adam's income investing webinar. Okay, that's one of those. In fact, I've seen the content and I am convinced to the point. I'm not someone who does income investing. When I saw what Adam is teaching, it's so much more makes sense. Okay, that I am going to open an account to invest the way Adam is going to share. Okay, to get income dividends consistently. Okay, so that my children can benefit, my wife can benefit from consistent income. Okay, so on Saturday, come in, join us for the last webinar, the income investing webinar. Oh, sorry, not the last one. Okay, but in the income investing webinar. Okay, and Adam will share with you his powerful strategies on how to invest for dividends for incomes. Okay, so with this, I see you guys in the Discord community. Okay, and may the market be with you. Keep winning. All right. Thank you. Have fun. Good night.